Good morning, it's 8 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. These are the headlines. UAE Airlines are expanding their global network. According to local media reports, carriers now operate flights to more than 250 destinations worldwide. The expansion reflects strong travel demand and efforts to boost international connectivity. This comes despite some regional disruptions affecting air travel. Rain is expected across parts of the UAE from March the 31st until the April 1st. Forecasters say skies will be partly cloudy to cloudy at times. Some areas could see light to moderate rainfall. Temperatures are also expected to drop slightly during this period. East Asian currencies have weakened as global tensions rise. According to international reports, the decline follows the ongoing U.S.-Israel conflict with Iran, which has boosted demand for the U.S. dollar. The Philippine peso has dropped to around 60 against the dollar, its weakest level on record. Analysts say investors are moving towards safer assets amid uncertainty. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
This is The Morning Drive. It's Mira Business FM. My name's Tim Elliott, and we often talk about Dubai's big hitters, tourism and hospitality businesses. But today we're going to focus on the other businesses that make this city, Dubai, such a dynamic hub, from community-led concepts to experience-driven brands. These are the businesses shaping how we connect, how we spend every day. And right now, I think it's fair to say a little bit of adaptation is having to happen. So what does resilience mean? And what does it really look like in today's climate? It's kind of what's going to drive, I hope, this conversation. First of all, and to my right, it's hello to Grace Karim, who is the co-founder of Bookends. That's a community-driven platform making reading more accessible through book exchange and cultural initiatives. Trying to get this right. But Grace, good morning.
Good morning, and thank you for having me here.
You're very welcome. Good to have you here. So also good morning to Lottie Jones, who is the founder of QuizBiz, which is a live entertainment company delivering, I'm going to quote here, Lottie, high-energy, interactive quiz experiences across the UAE.
That is correct. Hi, Tim.
Welcome. Nice to have you here. Also a side hustle in children's books. We might come back to that as well. And over Zoom, hi to Victoria Myers, who is the founder of the Small Retailer Network, which is a platform supporting independent businesses with training, mentorship, and growth strategies. Victoria, good to have you on as well.
Thank you so much for having me.
Good to have you all here. And what I want to do is get your opinions, your views on all of you, a number of things to start with before we kind of turn to your particular areas of expertise. So to begin with, and Grace, I'll start with you here. Across your industry, the different industries that you guys work in, but with you in particular, what changes have you felt most immediately since, we've seen this kind of rise in tensions where we are now, the uncertainty we're feeling?
For us, reading is a refuge for a lot of people who are going through uncertainty. So they go to a book for them to get into some normalities in their lives. So people want more reading, they want more pages to travel through so they can put what's going on behind them and move forward.
Kind of lose themselves, I suppose.
Absolutely.
Okay, so that's kind of a refuge. Lottie, what about you? What changes have you felt most immediately?
Yeah, so we're a very service-based entertainment provider. So we provide quizzes all across the Emirates for people who like to go into the pubs and the bars, etc., different venues. So what we're seeing is a lot of people still want to continue with our service-based entertainment, and it's the challenge that we have is that are we providing that in a safe environment? Do we support our community to come out and quiz? Are we also supporting them if they want to stay at home and still attend the quizzes? We are also catering for that as well. So we are seeing quite a few changes in how people are continuing with kind of the daily routine.
Yeah, I can imagine. Victoria, what about you? You talk to people regularly, you're training, you're mentoring people. What have you felt most immediately?
For working with product-based businesses, one of the main challenges that they have had straight away is that sharp decrease in sales when tensions started to really mount, because customer behaviour was very distracted from buying things to other aspects. What we've noticed is there has been a gradual returning to more normal levels of spending. But what's really challenging a lot of the product businesses right now is the supply chain issues that have been created by these regional tensions. So whether brands are importing completed products they've had manufactured themselves, or materials to manufacture, the supply chain challenges are something that has become quite apparent at this point, and is something that's obviously going to maintain quite a difficult position for some brands as we move forward. Having said that, obviously small businesses are very resilient, and they are finding new ways to manage, new ways to cope, and new strategies to overcome these challenges.
That's an interesting point. What kinds of practical changes have you seen, your clients, people you're mentoring, changing to protect or maybe grow revenues?
Well, what we have found is I always advise people to be checking their inventory and to making sure what product they have currently got on hand, what they're going to require, and what obviously they've got in transit that what they were expecting to have, and whether they're still going to be able to receive that in a timely manner or not. What brands have then been looking to do is either adapt their current stock planning strategy for the product that they do actually have on hand. Some brands have been adapting, creating new products, creating new styles and designs. In particular, we've seen quite a few brands who've been really emphasizing this connection to the UAE and to Dubai, and have been producing product which customers are really keen to buy into, which really reflects their connection to the UAE, and those kind of products which normally they might sell perhaps around National Day at the end of the year, they have been reintroducing, rebringing that kind of product back to the fore, because that's the kind of thing that customers are looking for at the moment, and really adapting their product strategy to meet the current needs of the customer.
Lottie, can I ask you the same question? Have you had to make any practical changes, any particular changes?
We have. So we have introduced the feature of online quizzing. So we're now doing it through Zoom, kind of harks back to COVID era.
I was going to say, yeah.
People make the comment, feels just like COVID, but obviously it's not. We're allowed out. We can move about our daily activities with caution. But yeah, we've started a new Sunday quiz, which happens every Sunday. Right. And the first one that we did was so huge in popularity that we actually almost broke the software.
So what did you get in terms of numbers then?
Well, we had 246 people join the Zoom wanting to connect from their home. And then the software allowed us to allow in 185 teams. And we didn't know the capability of the speed quizzing software, which is the software we use. So yeah, that was an awakening that we actually had a limit on that. But we've done one every Sunday for 4 weeks now. And the popularity is really amazing. But so is also the people coming to the bars. We've still got good attendance there as well.
Okay, so that's 246 people joining, but that could be 246 teams of people.
Households, so maybe
that's
couples,
households, so that
families.
could be 3-4 people potentially.
Yeah.
That's huge. Grace, let me ask you a little bit about your customers first of all. Are your customers behaving differently? Has it changed at all? You're talking about books as a refuge for people, but what's your feeling on how customers are?
We felt that people, they want to have an escape. However, they don't want to spend too much money. And they also want offers, and affordability is the key point for them to act. Having said that, we are a lot stronger online because we are a platform, we deliver across the whole UAE. And people are having the freedom to place their orders at their fingertips. They don't need to come to our store. However, because the people who are around our area physically, they wanted something that is normal into their life, they were bringing their kids and coming to the store. But of course, this is a lot less than it used to be before. And for that reason, we also went online and we did a few activities. We did a book reading, we did quizzes, we did discussions around books just to keep the community connected, and people, they attended, they were very happy to have this kind of activities. On top of this, because March is the month of reading, we are offering a 1 dirham book across the whole month, and it is still there until the end of March. Okay. And those are accessible through bundle online and through an offering in our store physically.
Do you know, the thing that I'm getting from this is connection, how important connection is, how important, seeking out, not companionship, but I mean, I guess that's a byproduct of it, but that the connection is key. Victoria, can I ask you about the kind of messaging that's resonating with customers at the moment? What are your clients, people you're mentoring, telling you?
Well, I think the thing that customers are really connecting with quite a lot at the moment is community, as you mentioned. So feeling part of something bigger than themselves right now and feeling part of a collective, because it is a common experience that we are going through right now. It is an uncertain time for everybody. So customers want to feel that the brands that they're shopping with recognize that and are bringing that community feel. They're also, customers are really looking for things like, they're looking for comfort, they're looking to feel cozy and safe in their home. So again, as Grace was saying, it was Lottie was saying, looking in those kind of like harking back to sort of COVID kind of feelings. It's that feeling safe and cozy at home. People are investing in things to make their home environment feel pleasant and comfortable. And then they're also really looking for a bit of joy as well, because there is so much heavy news at the moment. Things are serious. So there are also, on the opposite end of the spectrum, customers are looking for things that are going to bring them joy, and they're connecting with brands that are really helping them to see that it's still okay to try and feel good, and it's still okay to experience a bit of fun, a bit of joy, and even if it's different to how they normally would do it. So when brands can really communicate and connect with their customers on these kind of topics, they're finding that customers are really appreciating that and are really looking to connect with them.
Have you had to change where or how you market your services to increase visibility as of now, or to help with relevance?
Well, obviously, the work that I do is always relevant to small businesses and to help them to grow. So at the moment, it has just been more of the same. It has been connecting with all those people in my wider connections and my wider network, just to make sure that everybody is feeling okay and has got what they need. My role and my passion as a community leader is to help people feel supported, to help people feel safe. So I do have a very wide network and lots of connections. So that is what I have been really leaning into, is that personal connection, just making sure that all those individuals out there on a personal level are getting the support that they need. Whereas that's layered onto the community element, which is always there, which is bringing lots of business owners together.
All three of you have really strong community elements in one way or another in your businesses. Have you seen, I'll ask you first of all, Lottie, have you seen that, is it different in the current climate?
I think it's not different in a way that our messages were
kind
still
of
here.
Same but different.
It is,
I suppose.
because we've created with our community a sense of continuity and normality. And if you come to the quiz, you're going to get exactly the same experience as you did before. When you walk in, you kind of like leave the outside world behind you. You meet up with friends, you laugh. You can actually see the tension from people kind of leaving them as the quiz starts and they get into the trivia. So for us, we're keeping that message of we're here, we're open, we're still the same. But when it comes to, it's very interesting what's happening in entertainment at the moment, because, venues are kind of closing down some of their budgets. So some of the entertainers are unfortunately being laid off for the minute or on pause, or some entertainers are being asked to kind of take a pay cut at the minute. And, you can see bars and restaurants, they're putting lots of deals out, 50% off, teach them crew, etc. So it's really important that the entertainers are still able to perform, because that's the way that they make their living. And with the quiz hosts, what I'm doing right now is to ensure that the fees are protected, that they're getting the exact same fee with us that they are usually. And that's really important to us, that we keep everything kind of the same and our entertainers aren't feeling the kind of crunch, as it were.
It's such a difficult time, particularly in an industry like yours, where maybe people aren't, willing to gather as much as they were. Hopefully that changes soon. Grace, how do you turn? Obviously, you're very connected with the community as well. But how do you turn community into something that actively supports growth rather than just the engagement that you described with a book?
For us, we believe that Bookends is not Samia and Grace. Bookends is for every reader. And that was witnessed when we went through the floods in 2024. And we were scared that yesterday it was almost coming back, but last minute it was saved. When this happened, we had to close. We lost more than 14,000 books. We lost all our shelvings. And the way we came back is because of the community. And everyone gathered together. They came physically to help us. They came and they donated afterwards books. So they are connected to Bookends, and they always put in effort to support us in all means. And this is being seen now as well, because people are still buying books, and we have a good customers returns, the repeated customers. So you can see that there is a loyalty. The only thing is people are scared to leave their homes, so the store is a bit quieter than normally is. So this is the support that you are getting from the community.
But I spent yesterday buying sandbags, so I feel you. I can't believe 14,000 books. That's dreadful. Victoria, are you seeing more collaboration between businesses right now? And if you are, how does that look? In terms of community support collaboration. I mean.
Well, collaboration is always at the heart of what we do in the Small Retail Network, and it's something that's always a key focus for true collaboration. So rather than just saying that we're supporting each other, the goal is always for that support to be practical and it to be meaningful. So it's not just a case of working together on projects that will result in sales, but it's also the sharing of ideas, it's the sharing of support, it's asking questions and getting answers from within the community. And it's using that collaborative approach rather than a competitive approach, which really helps everybody to grow, because everyone can then benefit from each other's experience and each other's ideas as well. Because what we've really found is, particularly at times like this when there's heightened stress, it can be sometimes easier to see a clear path for somebody else's business that you've got a slight distance from than it is your own, which obviously you're very close to. And it can be quite difficult to kind of see a path out. So what we found is we've shifted some of the regular sessions that we have from the normal schedule to ones that have just been more open discussion, brainstorming, sharing of ideas, and helping each other to see a clear path through. And it's that kind of collaboration that brings good results for everybody in the long term, but it's particularly needed right now when it can be really hard to think clearly and calmly when the pressure is on if you're not making the same sales that you would expect to, especially in a month like March, which is normally a really strong sales month. It's been Ramadan and Eid. It's been St. Patrick's Day, it's International Women's Day. There's lots of things in March that generally generate a lot of sales. It's usually a really healthy month for the retail industry, but this has obviously had quite an impact on customers' normal buying behaviour. So having the opportunity to talk with each other and truly collaborate on coming up with solutions and ideas has been really impactful.
Lottie, let me ask you the same question, but you mentioned entertainers, of course, who may have been asked to almost furlough in some instances. Things are kind of in that holding pattern. How are you seeing collaboration between entertainers? They know each other, they work together.
We're seeing Like to echo what Victoria said, we're seeing a real kind of rallying round with small businesses right now. And, you know, I was at one of my quizzes last week and there was an entertainer who had just kind of been laid off or put on pause, as it were. And she was there and she said, I've come to celebrate the quiz, come to support you. And I thought, isn't that amazing? You know, you've actually come to one of our events when yours have paused. And I think that's how we're showing solidarity to each other right now, to support each other in the events that are still running. But to talk about the small businesses that are rallying around each other. So we work with 11 small businesses and they donate prizes for us for the quizzes.
Okay.
And for them, we kind of give them free marketing. So we'll feature them on the screens, we'll feature them on our Instagram, we'll talk about their businesses. And these are everything from kind of small yoga studios to salsa classes, free dentistry, there's home cleaning services, there's apps, things like that. And it's because I'm a startup myself, I formed Quiz Biz with just one host, which was myself. And we've grown to, you know, a team of 18 now. I think it's really important to really help each other that are starting up in the same position that I was 2 years ago. And it's something we can really do. And it's fantastic to see that we're all supporting each other.
It is. I mean, I guess in your business, it's kind of a naturally networking style thing as well, isn't it? I mean, that must help.
Yeah, definitely.
Yeah.
We all know each other, you know,
Yeah.
it's a very small industry and we all face the same challenges, you know, kind of, it's notoriously difficult in the entertainment industry here to kind of, the payments are a bit slow, things like that. So we're all kind of used to the same pitfalls. But then the highs are really high, you know, it's a fantastic industry to be in.
No, it is when it works and when things are going well. No, I'm completely with you. I want to turn to each of you and ask you a few questions specifically about you and your business, if that's okay. And I'm going to start with you, Grace, if I can turn to you for a moment. You're building, I mean, it's a long-term, it's a cultural movement, really, isn't it, with the 1 million books challenge. How are you driving momentum early on in a climate where attention, particularly at the moment, attention is fragmented?
For us, we thought that our purpose is to encourage more reading in the era where everyone is on social media and away from actual books.
Yeah.
And for doing that, we are having all the time affordable books in the market, online and in our physical store. So we thought we want to do more of that for the community to come back together. So collectively, we launched that challenge, which just launched last month. And by December 2030, we want to reach 1 million books read in the UAE collectively. So the idea is very simple. You finish reading a book, you come to the website and you log it. I read a book.
Okay.
You read 2 books, you just come and log it. And that is there until December 2030. So we have 5 years to reach 1 million books. I think it's not optimistic, it's realistic. So I hope we will reach that.
How do you know people are reading the books? How do you check?
Because readers, I tell you what, readers, they respect a book. They're true to themselves. And we have also unmanned shelves across the whole UAE in collaboration with other businesses, hotels, coffee shops, and restaurants. And those are run based on honesty. And we hardly have any stock that is lost because readers, they respect the book, they pay for the book. We don't have any stealing as such. And that comes also with authenticity. So there is no point of cheating and log in 20 books when you read only one.
It's the cynic in me that asks that. But I mean, I respect that. I think it's a great idea. I love the idea of it because it's kind of it's low tech. It's kind of offline. You do it when you want to. Is that, with the way we are these days, we're also tech-centric. Is that a real USP? Is that a strong selling point, do you think?
I think so, because people are getting back to authenticity. When we started Bookends 5 years ago, the idea was to be only online. We didn't have any intention of opening a physical store. In 2002, on a daily basis, people are asking, do you have a place where we can come and visit you? We want to touch the books, feel the books, smell the books. And we have lots of people who left their audiobooks and their Kindles to get back to actual books simply because books are affordable. So yes, we are not a high-tech business. We are very much low-tech because people are tired of being interrupted. They want a real me time. And when you are reading an actual book, you are having your me time because you're not being interrupted by any notification or a phone call or an email that is forcing you to put on hold your reading and then get back to the book. No, you are immersed in your reading.
Well, anything that forces you to concentrate on something for more than 20 seconds has got to be a good thing now. I mean, no, I can see in your eyes. What's your strategy? Because you can get people to participate. 1 million books in the 5 years or so is a nice idea, but you want sustained engagement, don't you?
Absolutely, absolutely. And that comes with our posts, with our engagement with people, reminder all the time. It is on our homepage, so people, when they come to the website, immediately they can see it. And regular reminders, people coming to the store, we talk about it, and we can see people are excited to participate.
Lottie, let me turn to you. QuizBiz is built around, really built around live experiences, plus you now have the online experiences, of course. But how do you keep the consistency up and keep the attendance strong, particularly now?
Yeah, surprisingly, or maybe not surprisingly, we've seen actually more people attend the quizzes in person than we ever have before. And it's mainly because
they're looking for something.
Yeah, because maybe we're on distance learning now for the teachers. People are working from home a little bit more during this time. And when it comes to the evening, people are like, right, I think I'm ready to go out now. And, as long as we're providing the safe environment. So we've moved all of our quizzes indoor. We did have some that were outside. And we are also providing the online quizzes. And we're giving people the option, if you want to stay in and quiz, we're here. If you want to come out and quiz, we're here. But in our bigger venues, the ones that aren't in hotels where footfall is low, where occupancy is low for tourism, we're seeing our venues in the residential areas taking a real jump in numbers. We're getting like 100, 150 people all coming to the quizzes. So in one area of our business, we've really slowed down and we're on pause when it comes to our kind of venues that are in hotels for tourists. But then it's actually taught me that QuizBiz is actually probably 90% residents. Our community is 90% residents. And we're seeing more people than ever actually attend quiz nights because they are craving the normality. They want to meet up with friends. And and the venues are kind of catering for that.
It's kind of business as usual in lots of ways, isn't it? If you had to adjust, the formats or the formula or the offerings at all?
We haven't changed anything to do with the actual format of the quizzes because we wanted people to feel like everything is just continuing as normal.
Right.
What we have made a big change is we've cut our expenditure quite a bit. So we've cut our marketing budget. The things that I would call the luxuries that kind of add to our visibility as a business, we've made trimmings to that. So when it comes to social media ads, kind of some forms of PR, because our quizzes can actually run, we're only operating with them. So if we have the quizmaster and we have the customers, we're running like that. We're not running any additional things.
Right.
Because we are a small business and we have got to take care of our cash flow very carefully. So we can continue to pay the quiz hosts.
Cash flow is everything, isn't it?
Everything. And this is what, going back to the COVID times as well, it taught us then cash flow is everything. And then it's been nearly 6 years since COVID. And I think we kind of almost lull into a false sense of security. I think everything's fine, but cash flow is king. And that's something that I have completely learned.
It really is that. It's the Godfather 3 thing, isn't it? Just when you thought you were out from COVID, you pulled back into a similar situation. As you scale, you're looking to grow the business. What are your next moves to keep up, any momentum that you're building?
Well, we started with one quiz. So I am myself a quiz host. I'm a former teacher as well, but I'm a quiz host first of all. And I built the team based on people coming to me and saying, I love what you're doing. I'd like to be a quiz host as well. And we grew from 1 to 14 quiz hosts. And we started off with one quiz and we were up to 24 quizzes across the Emirates. So we have 1 in Sharjah, we have 2 in Abu Dhabi, and the rest in Dubai. And the business plan is to keep on growing outwards and franchising the business model. So we want to go into the other GCC countries and beyond. And that is still the plan. It's just maybe on hold a little bit
Yeah,
in this time.
it's in the holding pattern, I suppose, at the moment.
And we've also launched a physical game, a trivia game. And that came from kind of videos that we posted online going viral. And we call it the Nerd Herd Trivia Wars. And it's got millions of views all over the world right now. And people have been saying, is this something I can buy and play at home? And we thought we should make it. So it came from kind of customer demand. And we weren't going to launch it yet, but we were actually pushing the launch forward because, of course, people are staying in a little bit more. This game you can play inside at home. And we thought, you know what, let's bring the launch forward. And so we're actually going into e-commerce as well.
One question with quizzes, pub quizzes, the like. How do you make sure that people don't cheat, don't use their phones? Because that's an ongoing saga.
So I used to do pen and paper quizzes, and I used to have to patrol in and out all the tables. And if I caught anyone cheating, it was a straight disqualification.
And the teacher came out. And,
oh, yeah. I went straight back to the classroom, you know.
Ruler, back of the neck.
Cheating. Oh, yeah.
Right, nice.
But we actually use an app which is called Speed Quizzing. It was developed in the UK and it's used worldwide. And speed quizzing has the function where you get points based on your speed. So if you answer super quickly, you get more points. And, you know, it takes at least 5-6 seconds to Google the answer. And some people do still attempt that, but they're not going to get anywhere in the top 10 because it's all based on speed.
Right.
So we've actually got around that issue.
Okay, good. Victoria, over to you now. Thank you for staying with us. It's difficult when you're on Zoom to bring you into the conversation as much as I'd like to. Let me ask you a very simple, very direct question about mistakes that you're seeing in the people that you work with. What are you seeing at the moment that businesses might not be doing properly or correctly or right?
I think the biggest mistake that I've seen a lot of brands make in the last few weeks is to just freeze entirely, and it's almost been a bit of a panic of not knowing what to do. And there's been quite a lot of concern from small business owners because they operate with such heart, and their business means so much to them, and their customers mean so much to them, that they've had a real fear of marketing their business and their product for fear of being insensitive or offending or upsetting anybody, and that's really held them back from telling customers what it is that they've got to offer. So that's been something that I've been really working with the people in our community, but also elsewhere, just to try and encourage people to remember that the customers are still out there, they are still wanting to buy, and it's really important that small business owners do tell customers what they have available to buy. So that's been something that we've really been putting a lot of focus on, is almost giving permission to market your business, to promote your business, to operate as usual, because I think a lot of small business owners have really felt a little bit of pressure and nerves to actually continue in that way. So that's something that I've really been working on, because particularly that then becomes a self-fulfilling prophecy. If you're concerned about slow sales and you're anxious about how customers will react, then you're not going to make any sales. And then it becomes, the longer it lasts, the harder it becomes to get back to it, to feel confident and comfortable doing your normal day-to-day work within the business. So that has been something that has been a bit of a challenge for a lot of small business owners, and it's something that I've been actively working on within the small retailer network community and within my wider network, to really encourage people to make sure they are doing it, because customers not only want to buy, but they really need some of the things that small businesses are selling. So that has been something that I think of a lot of brands have unfortunately held themselves back a little bit during this time, and that has had an impact on their sales. But as people start to feel a little bit more of what they keep referring to as the new normal, people are starting to feel a little bit more comfortable now. Brands are now starting to feel again a little bit more comfortable to promote themselves and market themselves. But obviously big brands, big companies are still doing the same thing that they've always done. They're still running their ads, they're still putting out their social content. Primark's still opening in Dubai Mall tomorrow. Like, big brands are continuing as normal, and it's encouraging small businesses to think in a big business way like that, and remember that they have a valid product that the customer wants to buy, and that they still need to make sure that they are marketing that product as much as possible, even during challenging times.
Yeah, it's the carrying on thing, isn't it? But it's difficult, isn't it? Particularly in a small business, you know, if it's one or two of you, it's that initial hit, I guess, to confidence, and it's important to remember that, isn't it?
Absolutely. And obviously, as we've been going through the course of these last few weeks as well, for a lot of small business owners who maybe are doing everything or most things in their business themselves, if they've also got to layer on homeschooling challenges on top of that, then the literal juggle of managing their time becomes much more challenging. But I think one of the big things that has been holding them back has really been the mindset and being able to have the confidence to continue to promote their products and to promote their business during this time, as well as the technical and sort of logistical challenges of actually being able to operate as usual.
You mentioned a huge brand there, an international clothing brand, Primark, opening at Dubai Mall tomorrow. Let me ask you a little bit about competition. How can small businesses compete with the larger brand with these huge marketing budgets and, staged openings, the way they develop their business? When it's really uncertain, a small business in particular can't overextend itself. So how do you keep that competitive edge that you're trying to grow?
Well, I think it's really important to recognise that although obviously there are limitations, particularly in terms of budget for what small businesses can do versus big businesses, they can still use a lot of the techniques, a lot of the strategies that large businesses use. They just have to adapt them more to fit into their own business model. And that's what I do as part of the Small Retailer Network. We look for the ways to use the big business strategies and to adapt them for small businesses. So, but the other key thing to think about when it comes to big business versus small business is that small businesses actually have a lot of advantages over big businesses in terms of they have a lot more agility, they can be much more flexible, they can respond to customer needs and changing business environments much more quickly than large brands can, which is like turning a very large slow ship. There's a lot of layers of decision makers to go through before a large brand can change direction, whereas a small business, they can make decisions really quickly. They can really react to what customers want and need at any given time, and they can adapt and make changes. And in that way, they can be better able to meet the needs of customers during challenging times like this than some of the big brands. And as I said before, we've seen this in the way that they have really leaned into this connection with the UAE. The big brands aren't able to turn around new product quickly enough to get that onto the shelves in a way that small businesses are able to do. And so there are obviously limitations and challenges to competing with big brands, but actually if you look at it from a different way and look at the advantages that small business owners have, then that can be something that's really positive and helps small businesses to see the opportunities and to continue to grow even in challenging times.
Number of questions that I could direct to each of the three of you, and I'm going to ask you, Grace, first of all, do you see where we are now? Do you see it as a slowdown, or do you see this moment as a time to reflect, so maybe a moment of opportunity in business terms?
For every business, it is uncertain of what is tomorrow hiding for us. And we need to take this in consideration while we are trying to keep our normality in place. At the same time, you have expenditure that whether you're working, you're not working, you have to endure that. You have to have the cash flow to cover that in terms of rent and other fixed operation costs that you have to cater for, whether you're working or not. And for us, I would say that we are a community-based business, and we are very close to our customers, and we have a support from people. We've seen that before, and we are seeing it now as well. And as Victoria was saying, this is the differentiation we have, us being small versus the big brands. We are accessible. People talk to us on the phone. They reach us on WhatsApp. Immediately we answer. So we are showing that we are there for you, customers. And we are providing some normalities into the days of uncertainty. And hopefully, this will not going to last for a very long time, and sooner or later we're going back to our normal days. And we are here to stay. We're not here to give up no matter what. Since we started Bookends, we've been hit by a lot of downs. COVID was one of them. The floods was another one. Now another uncertainty. We don't know what tomorrow is hiding. So to me, those are expensive lessons of resilience and how we will come out of that. We look back after a few months, we look back at it and we say, that was an expensive lesson.
Yeah, for sure. But you get through these things, don't you?
We have to. We cannot break.
Yeah. No, it's amazing what you can deal with if you face it. I mean, that's something you learn, I think. Lottie, let me ask you, what's a mindset shift that business owners need to make? Grace just mentioned the word resilience there. I'm going to use it again. You've got to be resilient at a time like now. But how do you adjust your thinking?
Absolutely. And, I'm relatively new to business. QuizBiz is under 3 years old. So everything is a learning process for me right now. And this is the takeaway. It's a good thing. It will help me grow better as the leader of a business. But for me, the mindset is that, we need to keep everything to be completely, continuous for all of our quiz guests. And it would just be to kind of keep pushing on and remember the thing about saving for a rainy day, the cash flow, everything like that. And, it's a time where we are slowing down. It's a time for us to focus on other parts of the business as well. For example, I can now put some more time and energy into looking at franchising, things like that. So, I think it's just about taking stock, fine-tuning the products that you have and the experiences that you're giving and making sure that the whole team feel valued.
And keeping on.
Keep going.
Yeah, okay. Victoria, let me ask you very directly, what's an opportunity right now that businesses might be overlooking in this current environment, this current climate?
I think small businesses, obviously at the moment, there has been a huge wave of support for small businesses across the UAE in the last few weeks. There has been, on every platform, every level, people are talking about the importance of supporting small business. And I think that this is a real opportunity now for a lot of small businesses to really secure that connection with the customers out there. People all across the UAE are putting their hands up and saying, small business is important to me. I want to shop with small business. So this is a huge opportunity for brands to really lean into that and listen and to really highlight the fact that they are a small business and how they can benefit the customer from shopping with them. And there's been all these posts sharing online about tag a small business, and it's making sure that if you are tagged or share or people are sharing these posts, that you're actually using that information to connect with the people who are putting their hands up and really using this opportunity to build community with customers who were already shopping with you, but also the customers who haven't yet bought but are interested and are looking for new ways to start shopping with small business and to show their support for the local businesses of the UAE.
So we've got a minute left. I want to ask you, and I'm going to ramble a bit so you can think about what I'm going to ask you next. The question is going to be your biggest piece of advice for businesses trying to stay strong right now, and you've got a sentence to answer this. So I'm going to come to each of you. I was going to offer you a paragraph, but time's just not permitting. So a sentence on being strong as a business in this current climate. Grace, first of all.
When you think of a book, think bookends first. We are here for you, no matter what.
It's a really good sentence. You clearly read a lot of books. Okay, Lottie, a sentence.
Protect your team, protect your community and staff, look after them, because, Dubai will bounce back, and it's a really crucial time to make everyone feel valued and that we will continue strongly.
Positive message. I like it. Victoria, final words are yours today.
I would say, do not go through this alone. Find the community that was there to support you. There are lots of other people who are experiencing exactly the same as you. And if you work together and collaborate, then you will come out of this stronger.
Three of you, I really appreciate you coming in today. Grace Kareem's the co-founder of Bookends. Great to meet you. Appreciate your thoughts.
Nice to meet you too. Thank you for having us.
You're very welcome. Lottie Jones is the founder of QuizBiz. All the best. Thank you.
Thank you, Tim.
And Victoria Myers, founder of the Small Retailer Network. Thanks, Victoria.
Thank you so much for having me.
Appreciate you joining us. How UAE businesses are doing right now. The thoughts of three people running very different businesses. It's been a great conversation. Thank you all once again. This is Mira Business FM.
Mira Business FM. The sound of success. Mira Business FM, Dubai's home of business radio.
It's the morning drive at Mira Business FM. My name's Tim Elliott, and pipelines now. We often talk about the Strait of Hormuz in terms of oil tankers, but today it's time to talk about a different kind of flow that's just as vital, our data. We're joined by the Middle East and Africa editor at the Rest of the World to unpack why Gulf nations are betting billions on new data corridors and what that means for business, for tech and for geopolitics. Indranil Ghosh joins us on the line. Indranil, good to have you on the show.
Thank you, Tim. Good morning, and thank you for having me. Yeah, it's an important, question that we are trying to answer here.
It is. I mean, in a recent piece, Indranil, you've been exploring how the Gulf is building digital pipelines, overland data cables between the Gulf and the Europe. Why has it suddenly become? Why is there such a sense of urgency so recently?
Because, Tim, the conflict situation has made it urgent. See, as we know, Iranian strikes hit an Amazon data center in the UAE on March 1st. Then both the Strait of Hormuz and the Red Sea were threatened at the same time. Now, virtually all data between Asia and Europe runs underwater through those two passages. There is no major overland alternative, and the situation is really getting worse. This week, 3 major submarine cable projects in the Gulf were reported paused, including Meta's to Africa. This is the world's largest undersea cable system. The gaps these overland projects are trying to fill is widening in real time.
How dependent, actually, let me ask you about geopolitical risk a little bit further, Indranil. What geopolitical risks expose the vulnerability of the existing internet infrastructure in the region?
See, Tim, the vulnerability was always there. The Red Sea carries about 17 submarine cables linking Europe, Asia, and Africa. In 2024, 3 cables were cut, and repairs took 5 months because ships couldn't reach safely the damage. What changed is the scale. And this is the first time both choke points, that's the Hormuz and the Red Sea, have been threatened simultaneously. The situation now is such that about 60 specialized ships that repair cables are not able to safely access either passage. And last week, Alcatel Submarine Networks, that's the French company which is laying the Meta's to Africa cable, said it can no longer safely operate in the Gulf. That's a cable designed to serve 3 billion people, which is now frozen.
How dependent, Indranil, is the Gulf currently on just a few maritime choke points for its data traffic?
Almost completely. There is no major fiber optic route connecting the Gulf to Europe by land as of now. Everything goes underwater through the Red Sea or through the Strait of Hormuz. That's it. Gulf states recognized this problem for oil decades ago, and they built pipelines like the East-West pipeline and the Hafshan-Fujairah route. For data, that kind of planning simply never happened.
Okay, so it's a question of kind of catch up at the moment. There are a number of projects either signed. I believe the Silk Link project was signed in early February. What are the key projects being proposed, and I suppose which countries are leading the race right now?
Well, as I mentioned in my report, Tim, there are now 6 projects. Right. And as you mentioned about the Silk Link, that's the most advanced.
Right.
Now, this is an 800 million Saudi-backed cable that is running through Syria to the Med Sea. Qatar's Ooredoo is building a second corridor through Iraq with 500 million committed to overland routes. Now, there's a third project called World Link, and this is backed by a UAE Iraqi consortium, which will also go through Iraq to Turkey. Then there is Sonic. This is a Saudi Omani link, a corridor from Oman through Saudi Arabia to Egypt, and a project called Horizon running through East Africa. So that makes it 6, all announced within months of each other.
So, what is it about building these routes politically and commercially? That's more complicated than the actual engineering, I imagine.
You're absolutely right, Tim. See, the engineering is actually the easy part. Overland fiber can match submarine cable capacity. The real challenges here are regulatory. Who gets to buy and operate fiber pairs running through Syria or Iraq? What will transit countries charge? Saudi Arabia, Qatar, the UAE were divided by a blockade until 2021. They're building separately rather than together, which tells you something about how much coordination to expect.
I guess so. And in terms of investment, it's a sizable investment. Just how big is it, and where does finance come from for these digital corridors?
Well, as I mentioned, Silk Link is an $800 million project from Saudi Arabia's STC group. Ooredoo Overland commitment is 500 million. World Link is 700 million from a private group. These are just 3 of the 6. The money is coming from state-backed telecom operators and sovereign-linked investors. This is really national infrastructure spending, not VC.
What role do tech giants play, and what role does the AI, the AI data center story play in Janil here in the Gulf in pushing this infrastructure forward?
Well, they are the reason, Tim, that the cables need to exist. You know, the Gulf attracted more than 2 trillion in tech investment pledges last year. OpenAI, Amazon, Microsoft, Google, they're all building major facilities in the region. Those data centers need connectivity to reach customers in Africa, South Asia, and Southeast Asia. And it's not just the data centers that are under pressure. Meta's 2 Africa cable, Ooredoo's FIG cable, and the CMEWE6 project have all, as I mentioned, reportedly been paused this week. The submarine infrastructure that these companies depend on is being frozen by the same conflict that has hit the data centers. And that is what makes the overland corridors more urgent than it ever was.
Can I ask you for just to broaden it, to give it some context here? Just to what extent do these shoots, or can they potentially reshape, Janil, the Middle East's role in global internet traffic and digital trade as well?
Absolutely and completely. Even if 2 or 3 of these corridors that I mentioned become operational, then the Gulf stops being a dead end for data, and instead it becomes a crossroads. Right now, data flows around the region. These projects, if they happen, would make it flow through the region, and that would change the Gulf's leverage in the global digital economy considerably, as you can imagine.
Do you just let me backtrack slightly there? Remind me, just run through again if you would. I'm trying to build up a picture here of the situation, the context of the situation. Which countries stand to gain the most if these new routes indeed are successful?
That's a very interesting question, Tim. Turkey. Turkey would be the silent winner.
Okay.
All 3 front runner corridors converge on Turkey as the gateway to Europe, and Turkey didn't build any of them or finance them. Istanbul's internet exchanges could become the switching point for Gulf to Europe data. DECIX, which is the world's largest internet exchange operator, just expanded its partnership in Bulgaria to handle the next hop after Istanbul. Beyond that, you have Iraq, which is positioning itself as a major transit country through multiple projects, which is actually remarkable given its recent history.
It is, it's fascinating. That is remarkable. Do you think we're entering perhaps a new era where internet infrastructure becomes part of geopolitical competition? I mentioned that phrase before we started talking, data is the new oil. To what extent do you think that's being borne out now?
You're absolutely right, Tim. We are already there. The fact that 3 rival Gulf states are building 6 separate corridors through 6 different countries tells you this is about influence more than bandwidth. One of the experts we spoke to, Christian Coates Ulrichsen at Rice University, put it very well. He said the race has reflected competition for influence rather than an alignment of effort. These cables are infrastructure, but they're also foreign policy.
That's interesting. Well, what are the biggest obstacles then that could slow, or these projects like this have begun before? I think, is it the World Link? Oh, no, it's Silk Link, isn't it? That is over an existing trail, if you like. But what could derail projects like this?
Several factors, Tim. First, every previous overland cable through a conflict zone was eventually either, severed by conflict. The Jedi cable through Syria was destroyed by the civil war. A cable through Iran was cut during the Ukraine war. Then there's regulation. Transit countries need to open their markets and set fair prices. Then the third factor is economics. Submarine cables are still cheaper and attract more customers. One of our sources that I spoke with, Doug Madori at Kentic, he told us that he suspects not all of these cables will actually be constructed. And the war itself could pause these overland projects too. The 3 major submarine cable projects in the Gulf, as I mentioned again before this, were halted this week. And the same could happen to construction on land if the conflict spreads.
The potential, final question, Indranil, the potential for these networks there's clearly a huge benefit. If they are built, how much more resilient would global connectivity actually become? What would we see kind of day to day?
Significantly more resilient, but they will not be not vulnerable. Right now, there is essentially one way to get data from the Gulf to Europe, and that, as I mentioned, is underwater through the Red Sea. Even if one operational overland route, were to be built, that would change the equation. But the experts we spoke to were clear that submarine cables will remain the primary, carrier. The terrestrial cables would offer.
Good morning, it's 9 a.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. These are the headlines. UAE Airlines are continuing to expand their global network. Local media reports show that carriers now operate flights to more than 250 destinations worldwide. Airlines including Emirates, Etihad, Fly Dubai, and Air Arabia are adding new routes. They're also increasing flight frequencies. These expansions cover Europe, Asia, and North America. The growth reflects a strong travel demand. It also highlights the UAE's role as a global aviation hub. This comes despite the ongoing airspace disruptions. Regional tensions are still affecting travel. Rain is expected across parts of the UAE from March 31st through April 1st. The National Center of Meteorology says skies will be partly cloudy at times. They will turn cloudy in some areas. There is a chance of light to moderate rainfall. This will affect several regions. Weather conditions may become unstable in coastal areas. Temperatures are expected to drop slightly. Conditions will feel cooler during the day. And authorities say there is no need for heightened concern at this stage. East Asian currencies have weakened as global tensions continue to rise. International reports say the decline follows the ongoing U.S.-Israel conflict with Iran. This has increased demand for the U.S. dollar. It is seen as a safe haven currency. The Philippine peso has dropped to around 60 against the dollar. This marks its weakest level on record. Other regional currencies are also under pressure. Investors are reacting to global uncertainty. Analysts say rising oil prices are a concern, and inflation is also weighing on regional economies. And now, a quick market and currency update. Bitcoin today is trading at $67,386. And for those tracking remittances, 1 dirham equals about 25.58 Indian rupees, 76.20 Pakistani rupees, 33.43 Bangladeshi taka, 16.53 Philippine peso, 14.48 Egyptian pound. Meanwhile, 1 British pound is equal to 4.87 dirhams today. That's the news for now. Follow more news on our website, mirabusiness.fm.
It's the morning drive at Mira Business FM. My name's Tim Elliott. We're going to be asking the question, just how close are we to global recession? We're talking energy and more next.
Mira Business FM, Dubai's home of business radio.
This is the morning drive. Just over 4 weeks into the Strait of Hormuz crisis, energy markets still on edge. Oil trading well over $100 a barrel. Shipping risks remain, and insurers are tightening conditions as uncertainty persists. What began as a regional flashpoint is now feeding directly into global recession risk, and supply chains are adjusting in real time. Governments are watching closely. The key question, are markets finding a new normal, or is a bigger shock still building? Lots to discuss. Robin Mills is the CEO of Kamar Energy, joins me on the show. Robin, it's good to have you back. Thanks for coming on. Where to start? I guess the big, broad question to begin with is as good a place to start as any. Where do things stand right now in the oil markets as this crisis continues, Robin?
Well, oil prices are jumping again, and this seems to be a consistent pattern. We get them talked down, but then when there's no action over the weekends, then the market opens on Monday, and then they're up about a couple of dollars overnight. And really, the expectation there, I think, the transit through the Gulf has hardly changed. Yes, a few kind of politically favoured ships are getting out, but really hardly any increase, and certainly nowhere near pre-war levels. And so the crunch continues to get tighter and tighter.
Well, it does. Somewhere over $100 a barrel, as it seems to be at the moment, for that 159 litres. Just how serious at this point is this for the global economy?
Well, very serious, and getting more serious with every day that the strait remains almost totally closed. So, the tankers the last tankers that left before the outbreak of the war are now arriving at their destinations. They're arriving at the further points. So, first of all, of course, Asia, India, and so on, and then now it's starting to arrive at in the first few days of April that they will be arriving in Europe and some of the further Asian points. And after that, no more tankers are coming. So then the crunch will really start arriving, and countries there will have to cut back on refining use, on petrochemicals when the oil supplies aren't coming. And already a lot of Asian countries have tried to bring in emergency measures. So stopping oil exports, trying to have people drive less, work from home, use less air conditioning, all kind of emergency measures. And that, of course, will have an effect on the economy as well over time.
Which we've seen very dramatically in the Philippines, of course. So a physical shortage of crude and I guess a geopolitical risk premium kind of built in as well.
Well, I don't so much call it a risk premium now. It's real, right? I mean, it's not a theoretical thing. Supplies will be disrupted. I mean, they absolutely are. So that risk premium that we had pre-war has translated it into reality. But still, the kind of headline oil prices that you will see, this the kind of $115 per barrel for Brent crude as we have now, it's not particularly high by historical standards, and it still doesn't show that the full magnitude of the crisis. If you ask what you would have to pay for a tanker full of oil today, if you wanted to, if you're a refiner, let's say, that's considerably more.
How long can the global economy handle oil above $100?
Well, above $100 is fine. We've been well over $100 before, and the economy has continued okay. I think it's when we get into the territory that we're approaching $150. That's when the emergency lights are really on. And I think we're gradually creeping towards that, and then probably we'll get closer, and the price will rise faster, unless there is some signs of a resolution to the crisis, which we don't seem to be seeing now.
Robin, how close do you think we're moving towards a global recession because of this crisis? The IMF has recently warned of a synchronized slowdown. If energy costs stay at this level through Q2, which of the major economies in Europe, in China, in India, would you expect to tip over into recession first?
Well, we see, let's say Goldman Sachs will tell you there's a 30% chance of a global recession, and that chance is probably increasing. Obviously, even in a global recession, maybe some countries keep growing. But I think, we look at the vulnerable ones. There are certainly some Asian countries, as you mentioned, who are big oil importers and will be hit quite badly. I don't know if that means India. The Indian economy has been doing very well recently. It may see a slowdown, but not an actual recession. But if we speak about recession, obviously the ones that are growing slower anyway are more vulnerable. So Japan, of course, stands out. That's a big energy importer. Some of the European countries, obviously the UK, Germany, they're vulnerable. The US is cushioned a bit as a big oil producer, but the US economy has other weaknesses. So the US economy, maybe for other reasons, but may tip into recession as well.
One of the things that characterizes the current situation is it's simply uncertainty, how long the conflict might last, the approach from the US president. I mean, we see changing announcements, ruminations, if you like, sometimes in the same press conference. What do you make of the uncertainty as this continues?
Well, the uncertainty is huge. As you say, we don't know how long the war will continue. We don't know what the resolution will look like. Is there going to be some kind of a diplomatic deal? Is there still a lot more military action to come? And what kind of this will ultimately end with some kind of negotiated settlement, but in whose favour? So all those things are uncertain. But also the impact of this crisis through all the supply chains and the other industries, and that I think people have been starting to talk about. But still, you don't really know that until you stress test the supply chain. So I'm talking about the way in which oil goes into all kind of other things like plastics, for example. Natural gas, which has been, of course, liquefied natural gas has also been cut off. That affects the power sector. That affects also plastics, fertilizers. Fertilizers go into the food industry. There's a whole bunch of other specialist materials that come out of the Gulf, like helium, which is used in making semiconductor chips. Sulfur, which is used in fertilizers and chemicals. So there's a whole bunch of other industries that will come under strain. And we're only 30 days in. So at the moment, people are still using their stocks. They're still relying on tankers that are maybe just still en route. Give it another few weeks when the supplies really stop. Then we start seeing which industries are going to be hit worst and which industries maybe have ways through this.
Are we starting to see businesses, consumers, cut back because of, for fear of uncertainty, for fear of the higher prices?
It's hard to say because we're only 30 days in, right? And most of this data, the formal data comes out monthly, and even then, the monthly data that we get now is still looking back at February. So, hard to say that. So we have to look at more anecdotal and high frequency data. But I think there's clearly signs, yes, that inflation is creeping up, and that'll mean probably more interest rate rises in the US, which will certainly dampen the economy. Flights clearly being affected as well as prices for fuel go up significantly. So there's all these kind of knock-on effects as well.
Is there anything that governments or anything more that governments or producers could do to calm the market?
Well, I think they need to look for individual governments who aren't involved in the war. Their options are limited, of course. But I think avoiding panic measures, but showing that they appreciate the seriousness of the situation, that they have a plan. I think things like sensible measures to ease demand and to make sure that oil goes to essential users, hospitals, schools, emergency services, and so on. That's helpful. Things like subsidies, things like trying to cap prices, restrict exports of fuels, those kind of things are dangerous and they risk spreading the crisis more widely.
In terms of supply, you've been tracking regional infrastructure for years. How much of the 20 million barrels that usually transit Hormuz can realistically be diverted through the East-West pipeline or the Adcop line to Fujairah? Are we hitting the ceiling of our kind of bypass capacity?
Yes, we are hitting that ceiling, right? So out of the 20 million, as you say, about 1.5, maybe to stretch up to 2 million is the Iranian supplies, which of course are going anywhere. They're not stopping their own ships. The East-West pipeline appears to be getting up to about 5 million per day of exports of crude oil going out. Of course, some of that oil in that pipeline is being used for domestic use in Saudi refineries. And the Adcop pipeline to Fujairah, about 1.7 million barrels per day. Yes, that's also being used about as much as possible, although there have been, of course, been some attacks on Fujairah. So all of those are at maximum. Perhaps you can squeeze a bit more out of them with some technical fixes in the short term, but not a lot more. So really, beyond that, we're reliant on which ships can get out of the Gulf by cutting deals with the Iranians. We've seen Indian vessels, we've seen some Pakistani vessels, maybe the Japanese, Thai ships, all doing deals, but I mean they're not at anything like normal levels.
We focus on petrol regularly, LNG, of course, but the Gulf is also a hub for nitrogen, for urea, as you've pointed out. How, in your view, is the current situation affecting global food security as we speak today? Or the potential, I guess, I'm aiming at.
Yeah, potential, I think, so far. I mean, look, we're coming into the planting season for the Northern Hemisphere. People would normally be applying fertilizer through April.
Sure.
So fertilizer prices are going up and likely to go up a lot more, as you say. And that is the nitrogen fertilizers like urea, as you say, but then also the phosphate fertilizers, which require sulfur to make them. The Gulf is a big exporter of sulfur. So both of those fertilizers potentially being hit. And that won't have an immediate impact, but it will have an impact, of course, when people come to harvest the crops in summer and there wasn't enough fertilizer and they didn't grow as much. And then there's all the logistical disruption, fuel prices going up, fuel not being available, so maybe food can't move around as easily as you'd hope. I think the danger there is that we get a knock-on impacts where governments, say, put bans on exporting food, and then food importing countries struggle to get the food no matter what price they're willing to pay, and that of course affects the lower income countries most, as usual.
Robin, I don't want to ask you to peer into a crystal ball, but I'm interested in your views for a number of different reasons, but in particular for the signs that you look for in terms of your expertise to tell if things are getting worse or if things are beginning to improve in any way. Any glimpses into the Robin Mills worldview, I guess I'm asking.
Well, I don't want to be too gloomy about all this, but we also have to be realistic, right? So,
Me too.
I mean, the one kind of semi-positive is that some ships are getting out. Some ships are doing deals with the Iranians. That they get inspected, they're kind of cleared as politically acceptable. We hear that they pay a toll, and you'll see a number of $2 million per ship thrown around, and then they get out. And so some liquefied petroleum gas, which of course is used for cooking, very important, is getting to India. And I was in India a few days ago. People were very worried about their cooking gas supplies. So there are some kind of signs of easing there. But we're talking a few ships a day, not the 100 plus that were crossing the strait before the war. Otherwise, no, I mean, look, we have to wait until there is some kind of a solution.
Final question for you. Do you feel as though there's a secondary shock building in the refined products market, diesel and jet fuel, that maybe we haven't seen yet? Or is it that well-worn adage in the energy industry, prices rise like a rocket, fall like a feather?
Well, I'm waiting for them to fall in whether like a feather or a rocket. I mean, at the moment, they're just going up, right?
They are.
And you actually like refined products. Yeah, jet fuel has already actually gone over $200 per barrel if you want to buy jet. So absolutely, we're going to see airfares going up.
Robin Mills is the CEO of Kamar Energy. Robin, always appreciate your insights. Thank you once again for joining us this morning.
Yeah, thank you.
Robin Mills, CEO of Kamar Energy here at Mira Business FM. Just a reminder of a couple of other things that we are doing here, and I look ahead to this morning as well. We're very much concentrating on energy, water, power and transportation as well this morning, as well as we're going to be talking events too. But a reminder that you can stay updated with our news on X, on the website mirabusiness.fm, and also on the WhatsApp channel. And podcasts, look for Mira Business FM wherever you get our podcasts from. Currently, Crossroads is one. Luxury Brakes, our automotive podcast. The Fine Print is a legal podcast. That's another as well. Wherever you get your podcast from. This is Mira Business FM.
Mira Business FM. The sound of success. Mira Business FM, your daily guide to the markets, money, and more.
It's the morning drive, moving on to energy markets, and they are shifting fast at the moment. Here in the Gulf, the ripple effects are being felt across power grids, water security, and investment pipelines, from supply disruptions to rising demand and the push towards renewables. The stakes for GCC economies have never been higher. Mark Dowdall is here. He's the editor for Power and Water at Mead, the Middle East Economic Digest, and he's a person who closely tracks how the region is responding, where the pressure points are, and what comes next for investors and policy makers. Mark, good to have you here.
Good to be here, Tim.
Thanks for coming on. First off, given where we are right now, impacted by the conflict, what's the situation when it comes to disruptions around the Strait of Hormuz and attacks on, obviously energy infrastructure?
Yeah, I mean, obviously we've been following this for the last month now, and I think when it comes to the Strait of Hormuz, the first thing to say is it's still largely closed to the global economy. Now, Iran did come out at the weekend and say it's open to a limited number of vessels to non-hostile countries such as Thailand and China, but for the most part, it's still closed. So that's kind of where we're at the moment. In terms of energy infrastructure, we've seen more developments over the weekend, where it's really now it's starting to move into infrastructure such as aluminium, steel, things that are really critical to obviously the construction sector over here. The latest developments over the weekend, we've seen aluminium plants have been attacked in both Abu Dhabi and Bahrain. I guess just to touch on the aluminium facility in Bahrain, Alba, Bahrain, it's the largest single-site smelter in the world. Even before this weekend, this producer had already closed 3 of its reduction lines, which is 19% of its total output. I think the important thing to be aware of with this is how much of a driver a facility like this is of Bahrain's GDP. And this is something that will affect it quite critically moving forward. On kind of the broader side of things over the last couple of weeks, I would say economically speaking, we're looking at the Ras Laffan Industrial City. That attack is probably the one that's going to have the most impact. So if you look at that attack, 2 LNG lines were damaged. This is the largest LNG hub in the world. The consequences for this are quite significant. So this will affect 17% of its export capacity. It's estimated that there's going to be $20 billion of revenue loss. And in fact, JP Morgan has just come out and said that forecasts Qatar's GDP to fall by 9% this year. So I think we're really seeing this conflict and the consequences seep into some really key sectors at the moment.
I mean, I was going to ask you that. I was going to say, can you put into? I was going to ask you for context actually on the significance of the threat to GCC energy exports, but also domestic supply stability at the moment. And that's the picture you're painting, isn't it?
Yeah. I mean, in terms of domestic supply stability, I still think at the moment it's really an issue of cost escalation when it comes to supply chain costs, insurance, shipping costs, this kind of thing. Obviously, some places in the region are a little bit more insulated than others. So I guess if you're looking at Saudi Arabia, for example, there are other avenues. They import a lot of their construction materials into Jeddah Port, for example. So they have ways to get around this. But I think at the moment we're really looking at it's the cost side of things. And I suppose if we're going to go into how severe this could be, well, really that depends how long this is going to continue for. And that's at the moment none of us really can say that. So that's kind of what's unclear.
Yeah, I mean, that is the how long is a piece of string question at this point, isn't it? And I don't mean to be glib, but it's very difficult to come up with any kind of formulated response. You've been in the region for what, 10 years?
Yeah.
We were just talking before we went to air there. And at Mead, you track structural changes to the GCC's project pipeline, a multi-trillion-dollar project pipeline. How exposed are GCC countries to the kinds of political disruptions we're experiencing at the moment compared compared historically?
Yeah. I mean, look, the first thing to say is I'm a lot more confident where the region is now and being able to deal with these kind of things compared to where we were a few years ago. So if you look at, for example, the local manufacturing base has been really built up over the last number of years.
Yeah.
So now when it's the major cities in the region, these are quite active project markets. And I think a lot of this supply chain is now actually being developed in region and in these major cities. So that kind of mitigates a little bit of the risk. Now, I can't sit here and say there's not going to be supply chain consequences. Obviously, there will. I guess, if I was to go back to a previous crisis, if I was to go back to 2008, 09, for example, when we had the real estate banking crisis, construction there stopped. And it wasn't just in the early stages. It was actually live on-site construction. It stopped. In 2014, 2015, we had the oil price dip. Here we saw certainly a slowdown in spending. We saw this again during COVID. We certainly saw a slowdown in spending. I think right now what we're seeing, and obviously it's still relatively early days, but construction, on-site construction is continuing. And for me, I guess as someone who follows projects very closely, and this is something that we obviously do at Mead, that's probably one of the greatest benchmarks of being able to tell how big a crisis is. So right now, we're certainly not seeing the same kind of slowdown in the projects market as what we were seeing previously. In terms of upcoming projects, contracts over the last month, a number of contracts have still been awarded. Tenders are still being put out. Companies are still bidding for these contracts. So I would say the projects market, it's quite resilient. And again, to go back to that piece of string scenario, it's obviously the longer this continues, then we will see a greater effect. But for now, I think things are continuing, which is good.
Okay. You've recently written that for the GCC, water has officially overtaken oil as the region's most strategic commodity. Given the situation, Mark, how have the risk profiles for these, the coastal hubs, if you like, changed for policymakers?
Yeah. Look, I think obviously it's desalination, for example, water infrastructure here is critical to the region. And I think it's worth pointing out to begin with that it's a civilian infrastructure, that it really is critical to everyday life. It's critical to industries, to hospitals, and everyday life. So it's over the years, I think, as more desalination plants have been added, we've seen certainly a geographical diversification. If you take UAE, for example, we have desalination plants in Fujairah, and spread quite wide apart.
Yeah.
So this does give a little bit of security in this sense.
Are we seeing any power generation costs or water desalination operations? I think I'm just really asking you for news.
Yeah.
Off the top of my head, do you know what I mean?
I think really when it comes to the power generation facilities, it's really more the effect is more on the operational side of things.
Right.
In terms of costs, I guess being in this region, fuel and availability of fuel isn't so much an issue compared to maybe Europe or the regions where obviously electricity costs are going through the roof right now. So it's more the operational side of things and trying to keep plants running, trying to potentially operate on reduced staff, coordinating with the government to ensure that there's different scenarios in place, because ultimately these facilities, they need to keep running. So that's the most important thing. I think actually it's worth just to say that in terms of the export side of things, in terms of energy exports, the likes of UAE and Saudi Arabia are also a little bit more insulated than some of the other GCC countries. So I guess if we're to take crude oil, for example, in Saudi Arabia, you've got the East-West pipeline.
Yeah.
So this can transport 7 million barrels per day of oil out to Yanbu and off out to the Mediterranean coast. So in this case, it can avoid the Strait of Hormuz entirely. Similarly, UAE has been developing its export pipeline to Fujairah over the last 10 years. This can export 1.8 million barrels of oil per day. So it's now obviously this isn't going to make up for all its oil production, but it will help. And I guess in contrast to that, you've got Kuwait, Qatar, who don't really have an alternative export option. And I guess there's no real short-term solution to that because these kind of things take quite a long time to build. So it's quite a long-term kind of thing.
Yeah, I wanted to ask you a little bit about protection. Your view at Mead, if you like, as to how governments and operators are responding in real time as well to protect energy and water infrastructure. What you're seeing.
Yeah, look, I think it's. I don't see it as a dramatic response. I think really it's just about close, clear communication with the operators of their plants, and that's something that historically this government has been very good at in the project sector over the last number of years. There's a lot of transparency and coordination with stakeholders. So really, I think that's kind of the main thing. It's just having those communication lines to keep these plants up and running.
Yeah, this is the thing. I mean, it's the modern age, isn't it? That we have these communication lines, but so much of the online information or so-called information is so uninformed. Very often, it's really so speculative, particularly around. I was thinking yesterday, ahead of talking to you, the limitations of water storage, for example. So much speculation around that. Some people say you should get down to the supermarket and buy your boxes of, and I just think no, you really shouldn't. It's okay, but from your knowledge, what's the actual reality when it comes to water storage here? Let's take the Emirates, for example.
Yeah, look, I don't think it's a case of our taps are going to stop working in the morning.
No, it's not at all. But a friend of mine was in a supermarket the other day and met somebody she hadn't seen for a long time, and this person was adamant that she should buy the stock of water in the supermarket. And I thought, get a grip.
Yeah. Well, look, there's no denying that desalination. I mean, to take UAE for example, desalination facilities account for over 90% of the total potable water.
Yeah.
And that's that's something we see throughout the region, that kind of trend. Yeah. Obviously, there are reserves, there are supplies, and that gives a limited number of time. We're looking at a couple of weeks probably. But again, I do think the fact that this geographic diversification, one desalination maybe hit isn't necessarily going to cause people running down to the shops to get their stocked up water and to start panicking too much. I think there is a reserves there to give time to kind of deal with these scenarios.
Yeah. From your tracking at Mead, Mark, are we seeing more of a push maybe to fast track strategic storage prospects? You know, things like the Liwa aquifer in Abu Dhabi, or there are new dams in Hatta as well.
I mean, I think one of the things we were seeing already, which the Iran war doesn't necessarily change, is a diversification towards different types of, I guess, on the power side of things, different types of renewable power. And I think this was a strategy that we were seeing already. So I don't think the Iran war really changes that so much. I do think in terms of upcoming projects, I mean, there's still quite an ambitious pipeline.
Yeah.
I think certainly we can expect maybe investment decisions to be put back a little bit. This
exercising some more caution, I suppose,
absolutely,
is natural, isn't it?
absolutely, yeah. So I mean, there will be some more caution when it comes to investment in the region. I think, first of all, I guess it's important to look at the profile of investor. So if you're looking at the power and water infrastructure, for example, so these are typically very long-term assets. The kind of person that will invest in something long-term like this tends to be quite risk-averse. So you're looking at kind of pension funds, things like this. I definitely think they are going to probably be asking questions now about the long-term geopolitical risk. And I guess if there's one thing that actually really kills investor confidence, it's uncertainty. And uncertainty, there's uncertainty not just in when the war is going to end, but also how it will end. Another thing to mention would be if you look at the structure of the market over the last couple of years, so a third of projects that were, or a third of new contracts that were awarded in Saudi Arabia last year were PPP, private-public partnership projects. So these kind of projects typically require a security in terms of the offtake. So that would be, so for example, if a power generation facility is producing power, or equally if a desalination facility is producing water, the government will provide a guarantee to buy this generated power for maybe 20, 25 years. I think if the government can still provide these kind of guarantees, that these projects will be okay, but certainly there's a lot of questions that investors will be asking. And I think even for the more local, regional investors, I guess right now, and this may change, they will probably be thinking of maybe investing outside the region to help manage that risk of their portfolios.
The diversification strategy.
Exactly.
Sure.
Exactly.
Let me ask you a little bit about renewables. Kind of move sideways slightly. How do you see the risks influencing the pace, the scale of renewable energy adoption in the GCC? Yeah,
I mean, I think actually even before this whole conflict started, we were already starting to see a little bit of a change when it comes to Saudi Arabia. So they've quite an ambitious pipeline of renewable projects. They want to reach 130 gigawatts by 2030. So this is obviously part of their national strategy. To put that into context, in 2025, 23 gigawatts was all they had in installed capacity. Okay. So that's quite a jump. But I think we are already starting to see a little bit of a slowdown in terms of some of the major giga projects in Saudi Arabia being scaled back a little bit, moving towards some of the more kind of risk-averse, maybe some of the less glamorous projects, but some of the more risk-averse critical projects, power and infrastructure being one of them. I don't really think this conflict actually changes that too much.
Let me ask you about the intersection between energy and sustainability, and how regional governments are balancing immediate energy security concerns with their kind of long-term sustainability goals. For example, here in the UAE, we've just had an announcement of an investment. It's not a huge investment, but it's significant, I think, in terms of the timing. 120 million dirhams in a major energy and water reduction scheme in federal buildings.
Yeah.
Just as an example, first of all.
Yeah. I mean, I think this, just to touch on this energy and water reduction scheme, I think, obviously we're very much focused on the project side of things, but you often forget that there's two sides to the equation. So there's new generation, but there's also being very efficient with the way you run current facilities.
Exactly. It's the example that's important here, isn't it?
Exactly.
Yeah.
Exactly.
Yeah.
And I guess, if this is something that they can do well and save on having to produce extra electricity generation, in theory, this could lead to less power generation plants. But I think that the scale of what the likes of Saudi Arabia and UAE are trying to achieve, a federal energy and water reduction scheme is small on the larger scheme of 130 gigawatts by 2030, for example. So I think they will continue to press ahead with these projects. I mean, on the short-term side of things, the immediate concern, obviously, is the operational side of things. So that's the existing infrastructure that's in place, and just ensuring that these continue to operate in a safe and controlled way. I think that in terms of long-term sustainability plans, the conflict won't necessarily change this. As I said, some investment decisions may be put back a little bit. Some tenders that maybe were due to be released in the coming weeks might be pushed back a little further into the year. But I think in terms of the longer side of things, it doesn't change a whole lot. And again, it really depends how long this goes on for. So it's, if we're sitting having this conversation, and I really hope we're not, in a year's time, things could look quite drastically different.
Well, look, you're very welcome to come back in a year's time, hopefully a lot sooner than that. But you make a very good point. But we're back to that piece of string analogy again, unfortunately. I wanted to ask you something. Me Projects shows the pipeline something like $1 trillion in the UAE and Saudi Arabia. I'm hoping that figure's in the ballpark.
Yeah.
You're nodding. That's good news. Are we going to start seeing international investors in the power and water sector looking for conflict clauses, do you think? Or does the region's long-term growth story still kind of outweigh security concerns, or that kind of security shadow, if you will?
I mean, I think as I said already, what we were seeing was a little bit of a pivot from some of the more glamorous infrastructure towards some of the more kind of stable, secure projects. I do think that's one of the things that the power and water infrastructure market has going for it. It does have quite a good track record of getting PPP projects delivered. So I do think in terms of in terms of international investors, that will provide a little bit of confidence to them more so than maybe some of the other markets that are a bit newer to the PPP model side of things. So you're right, they may look for clauses, but I think there's a little bit of confidence that, you know, power and water infrastructure, and again, it's worth pointing out that it's critical. This is a critical civilian infrastructure that we need to live on a daily basis. So, I mean, it's in quite a different bracket to, you know, your gigascale NEOM projects and new stadium projects, this kind of thing. There's a real critical need for this kind of stuff. So
yeah, so there's a level of confidence that's been built and banked, I guess, as well. When you consider the leads and the stories and the ideas that are formulated and that you're following at the moment, is there something that maybe investors, I hate asking for hidden trends, but you know what I mean when I say that people investors should or could be watching as the region, you know, navigates its way forward?
I mean, look, it's difficult to say in terms of the you know, the tenders coming up. I will say, if we're to look ahead to the project pipeline, and at Mead, we have a full visibility into the projects that are coming up in the next 5 or so years. If we look into this, we can see in Saudi Arabia, for example, so the Water Procuring Authority, Sharakat, just released a 7-year statement saying that they're looking to nearly double desalination capacity by 2031. So there's, I guess, if you're a contractor in this market right now, there are some quite big water infrastructure desalination plants due to be built in the next 5 years.
It's wild that 2031 is just 5 years away, by the way.
Yeah.
It seems like we should be in flying cars.
It doesn't feel right when I say it like that, does it?
It doesn't at all. It's literally round the corner. I think that's age. Anyway, despite the tensions, let me ask you this. Where do you see GCC opportunities emerging, particularly in the energy sector and the water sector, you know, your area of expertise?
Yeah. As I said, obviously desalination will be a big one. I think if we look more at the power energy side of things, certainly we're going to see a continued shift towards solar power generation. We've already seen that in the last 2 to 3 years. Obviously, Saudi Arabia has its national energy program, and we're going to see a continued shift towards that. If we look at contract awards, for example, in 2025, wind power had a bit of a breakthrough year, surging 125% in contract awards. So wind power now in the region is coming on quite strong. We see this in Oman too. So Oman just recently released its own vision for the next number of years, and we're going to see a real increase in wind independent power producer projects coming online over the next few years.
Final question for you, and it's nothing to do with anything we talked about. I'm just looking back at the week that was last week. Something like, what was the record? 244 millimeters of rain in Yanas Mountain in Ras Al Khaimah. Weather doesn't wait for infrastructure. It is connected to what you do, but Dubai's greenlit the Tasreef project, which is a 30 billion dirham project, not due for completion until 2033. You've been writing that recent tenders suggest perhaps a more coordinated, joined-up approach to water planning. In the interim, is this a signal to the market that the UAE is moving towards a more kind of master plan, more resilient future when it comes to things like the rains that we've just seen? Or should I keep the sandbags ready by the door?
Yeah. No, look, I mean, I think the government, and I don't want to speak on behalf of them, but I think they certainly recognise that there's been a change in climate over the last few years, and we're having a lot more of these intense rainfall events. And you're right, there is a more of a coordinated approach.
It seems that way.
Yeah, and trying to develop a real strategy from the beginning. I think the goal and the challenge when it comes to something like this is how quickly these kind of projects can progress through procurement. Because obviously, I mean, as you just said, and as I've reported on, rainfall doesn't wait for these kind of projects to come online. So I think the important thing is to try and get these projects online as quick as possible. But certainly there has been a change, and I think even if you look at the rainfall of 2024, April 2024, I think we've actually bounced back an awful lot quicker this time around. And now, maybe the rainfall wasn't quite at the same levels as then, but I do think we've seen even small signs of progress since the rainfall of 2024. So there is progress, and the place will become more secure. I would say don't get your sandbags just yet, but it just needs to happen kind of sooner rather than later.
And do you know, I think that's a really good point. I think there was a real improvement. In 2024, that was a seriously freak event, wasn't it? It really was. And the flooding that we saw was extremely unfortunate, but it was a real freak event. But this time it was a sustained level of rainfall over a number of days last week. And I think it was dealt with in a very different way. It didn't seem to have quite anything like the same impact. I think that's a fair point. I'm not kidding about the sandbags, by the way. That's the best 36 dirhams I've ever spent this time around. It really is. I really appreciate it. I don't know how you keep the information and the figures in your head the way you do. I have to commend you on that, because I have lots of notes in front of me. You haven't even looked at your notes, Mark, in this whole conversation. So kudos. I hope you come back soon. Mark Dowdall is the editor for Power and Water at Mead. That's the Middle East Economic Digest. And I appreciate you joining us this morning.
Thanks, Tim. It's been a pleasure.
Thank you. Good to have you here. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.
Good morning, it's 10 a.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. These are the headlines. UAE Airlines are continuing to expand their global network. Local media reports show that carriers now operate flights to more than 250 destinations worldwide. Airlines include Emirates, Etihad, Fly Dubai, and Air Arabia are adding new routes. They're also increasing flight frequencies. These expansions cover Europe, Asia, and North America. The growth reflects strong travel demand. It also highlights the UAE's role as a global aviation hub. This comes despite ongoing airspace disruptions. Regional tensions are still affecting air travel. Financial reports show the Philippine peso has dropped past 60 against the US dollar. Other currencies in the region, like the Indonesian rupiah and Vietnamese dong, are also weaker. The Chinese yuan is losing value more slowly, supported by its large economy and reserves. Experts say the decline is caused by the Middle East war and rising oil prices. Countries with high inflation and trade deficits, such as the Philippines and Thailand, are feeling the impact more strongly. Fuel prices are rising worldwide. Reports show dozens of countries have increased retail fuel prices this month. The hikes vary depending on local taxes and supply pressures. Meanwhile, the UAE is expected to announce the April petrol and diesel rates tomorrow, according to local reports. Experts link the increases to higher crude prices and global uncertainty. And now, quick market and currency update. Bitcoin today is trading at $67,495. And for those tracking remittances, 1 dirham equals about 25.58 Indian rupees, 76.20 Pakistani rupees, 33.43 Bangladeshi taka, 16.53 Philippine peso, 14.48 Egyptian pound. Meanwhile, 1 British pound equals to 4.87 dirhams today. That's the news for now. Follow more news on X and Telegram. This is Mira Business FM.
This is the Morning Drive. It's Mira Business FM. We're talking about fertilizer in a few moments' time. The shortage, which is raising global food prices, potentially, and the risks associated. That's coming up at Mira Business FM.
Mira Business FM. The sound of success.
On the morning drive, we're talking about oil and gas a great deal at the moment, but there is another liquid and powder moving through our oceans that's just as vital for us all, and that is fertilizer. Now, tensions around the Strait of Hormuz and the growing threat to fertilizer supply are raising fresh concerns for global food markets. Disruptions to transport routes and key agricultural inputs could put pressure on crop production, productivity, and ultimately food prices. And the United Nations is warning that these are building in terms of the risks with potential impact for both developing economies and major exporters. Joining us, Frida Youssef is the chief of the transport section at UN Trade and Development, UNCTAD, and is here to unpack what this means for global trade, food security, and how the UN as well is responding. Frida, you're very welcome. It's good of you to join us today.
Good morning, and thank you for inviting me.
First of all, this is a situation affecting nearly a third of the world's traded fertilizer supply. Could you put into perspective just how serious the situation is at the Strait of Hormuz and the implications for fertilizer supply, first of all?
Okay, thank you. So when you have one of the most critical choke points for energy supply and all related commodities such as fertilizer coming to a halt, close to a halt, it has a serious impact. The disruption that we are witnessing across the Hormuz Strait is starting to having an impact on not only the energy but also fertilizer, and which in turn will have repercussion on food production and food supply. And why so? Like you rightly said, 1/3 of the global fertilizer seaborne trade is carried through the Hormuz. So any disruption at this level would have, again, repercussion, like I said, on the food supply. And what we have been witnessing over the past, since the start of the crisis, a sharp drop in transit through the Hormuz from, an average of about 130 transit per day. That was during the period of 1st to 27th February. We're seeing now around maybe a single digit, like maybe 6 to 7 vessel per day. And this has, like I said, serious repercussion on the supply of fertilizers, as well as on gas and oil, and gas being an important material input to also produce fertilizer.
Frida, how quickly could this start affecting agricultural production and yields?
Yes, so what we're seeing now is really the impact is really happening at the price of fertilizer. We've seen an increase of 20%, for example, 20 to 30% in the price of urea. So what does it mean? This means that the farmers are being impacted with this increase in cost of fertilizer, as well as availability of fertilizers. And this decision, this issue will impact their decision in terms of plantation. And this is now the season for planting, more specifically in the northern hemisphere part. So when you have a decision taken today in terms of how much you're going to be able to use in terms of fertilizers, or whether you would decide to switch to crops that are less intensive or less reliable on fertilizer, this will have an impact on the production in the coming months when the crops will start to be harvested. So the immediate impact is an impact on price and availability of fertilizer, which in turn will have an impact on the decision for harvesting, but the production will we'll see it in the coming months with the harvest of crops.
What does it mean for global food prices in the near term?
In terms of food prices in the near term, where we're already witnessing an increase in inflationary price, are going up, and this will lead to increase in inflation, not necessarily in shortage, but really inflationary risk, and this will, would have repercussion again on the food production, food supply, and consumer price ultimately.
Which regions are most exposed to the risks that we're seeing right now?
Now, in terms of regions, for example, I would say Asia is one of the most region that is being affected because of their reliance on energy supply from the Gulf. Almost 85% of their supply, is Asia, as well as the fertilizers import. Now, you have also countries that are highly also dependent on fertilizer imports, specifically from the region. We have, for example, Sudan, Australia, Tanzania, Kenya, Mozambique. All these countries are really heavily reliant on the fertilizer import from the Gulf, and some countries have limited capacity to diversify or also to rely on increased fertilizer production at the national level. Africa also would be one of the region that would be affected because of the large agriculture sector.
How are shipping and logistical challenges compounding the problem?
Logistic and shipping, they're key component of supply chain, and the sector is being disrupted first by, of course, the fuel price, as we have seen. Energy price have increased, and the fuel price, bunker fuel price for vessels has been increasing, more than doubling. So this is already an increase in the operational cost of shipping. You have also war premium that have witnessed a surge in cost. We've seen it going quadrupling and even going by tenfold. So this is really has an important impact on the cost of shipping as well as on the availability of shipping. The vessels are not also available, and this is creating an increase in freight rates. So you have an increase in freight rates, you have an increase in operational costs with fuel and insurance or premium, as well as the impact on, for example, when the shipping is trying to reroute to longer routes like the Cape of Good Hope, or trying to use other transshipment ports. This is also creating delays in the delivery. This could create also more congestion at the port level, and the repercussion would be reflected from on the cost ultimately of trade, as well as on the delivery time, the increased in unpredictability and reliability of delivery of goods.
Can I ask you, are we looking at a short-term shock, or is there a longer, more structural risk?
What we're seeing is basically both the short-term shock. We're seeing it with the price and availability of ships, of goods, and we're here if we're talking about fertilizer in particular, and also, what we're seeing is this increase in disruption, like we've been witnessing over the past years, whether with the Red Sea, the Black Sea, and now the Hormuz, disruption. This is becoming something like long-term structural feature for global trade. See, hence the importance really of building the resilience of the sector. And by building the resilience of the sector, it means diversifying resources by investing in more, a sustainable transport and logistics system, and shifting to more also sustainable patterns. So the increase in resilience is really becoming key in this regard.
How is UN Trade and Development, UNCTAD, working with countries, working with industry on solutions, Frida?
Well, with UNCTAD, we've been basically monitoring all these developments, all these disruption, collecting data, providing analysis, and what does it mean in terms of impact on the maritime sector, shipping and ports, on corridors, on also impact on trade, the supply chain, and also economies. Another important also aspect of our work is we help to bring together government with partners to really reinforce collaboration and cooperation and reach coordinated actions and solutions.
Final question.
And
Sorry, go on.
Ensure that maritime transport remain open, remain secure, remain reliable, in line with international law.
I apologise for butting in. The final question for you, well, two questions really, kind of combined. What should businesses across the food supply chain be preparing for now? And what are the key risks to watch for over the coming months?
Right. So for the business industry, what they should be considering is really that uncertainty is here to stay. Volatility is increasing. We've been witnessing this over the past years, and this can lead to higher cost and high prices. Hence, again, here, what is important is really the ability to be able to respond quickly, to have this flexibility to find alternative solution, to have a proper planning, logistics planning. And I go back to the word of resilience, building resilience, and by building resilience is really the ability of the business sector to be able to prepare for these shocks, to be better prepared to go through this shock, navigate these shocks, and as well as to adapt to the new developments and the new reality. So this is very important when it comes to building resilience, whether from the business side or also from the sector side, as well as in terms. If what you said about the risks here, or what to monitor. Basically, keep monitoring developments that are happening at the Hormuz with the transit development, and looking at all these different price fluctuations, whether from fuel price or food price, and also the shipping side, the freight rates development, the port congestion, all these elements that are really adding to the compounding to the cost of trade, and at the same time enhancing collaboration and cooperation with the various stakeholders.
Online from Geneva this morning, Frida Youssef is the Chief of the Transport Section at UN Trade and Development, UNCTAD. Frida, thank you for joining us at Mira Business FM today.
Thank you, Tim.
Good to have you on the programme with us. This is Morning Drive. It's Mira Business FM.
Mira Business FM, where business comes to talk. Mira Business FM, Dubai's home of business radio.
It's the morning drive on Mira Business FM. My name's Tim Elliott. Disruptions at energy sites, pressure on ports and airports. Global trade is facing strain on every front at the moment. So how are supply chains moving? How well are they moving? Joining me to discuss how logistics leaders are adapting to rising volatility across air, sea and land is Tobias Meyer. He's the CEO of DHL Global Forwarding in this region. Tobias, good to see you.
Thanks for having me, Tim.
I appreciate you coming in. I know you're busy. We've limited time with you, so I'll try and pack in as many questions as I can. First of all, how would you describe the level of disruption now across air, sea and road networks?
Well, the good news is supply chains are running. We have different levels of disruption, I think, per mode of transportation. Looking at air, for example, when we first got into this crisis, we had a disruption because airports were closed. The good news is that air, I think, is back online, as we say, and backlogs have been worked through. So there, things are actually running pretty well. On the ocean freight side of things, we have the Strait closure situation, which is building up certain pressures. On the good news is we have especially Gulf Khan as an alternative port, which is taking a lot of the supply chains at the moment. So overall, supply chains are running, different levels of disruptions, but we keep going.
You took the helm at DHL in late last year, is that right? So, just really as the crisis kind of began to escalate, we began to be aware of it. First of all, what a welcome to a new role, of course. Has there ever been a time when both primary air and sea gateways in the Gulf were simultaneously strained like this? And what does it mean operationally when energy sites and ports and airports are all under threat at essentially the same time?
Well,
I can see
I'm pretty new in the role, but
Sure.
The good news is I'm 10 years in the region, so I know the region pretty well. And the good thing is DHL is in the region operating since 5 decades. So we have seen a lot in the last 5 years. I think most notably was, for example, COVID, which I think was an event not so dissimilar to what we see at the moment, especially when it comes to air freight. Overall, I think as DHL Global Forwarding, we always try to stay on top of things. It's very, very important that we keep everybody informed of what's happening, the options we have at hand, trying to orchestrate that the cargo finds its way to flow. And with our 5 years experience here in the Middle East, I think we are very well positioned to handle the current situation.
I mean, some commercial shipping, it effectively is postponed, isn't it? So you've had to pivot. So you mentioned Gulf Khan, but there's also Sohar, I suppose. Are they the emergency kind of gateways, if you like?
Yeah, you have Sohar, you have also Fujairah, you also have Salalah further south. Salalah is actually a pretty big port, has some capacity. The disadvantage is the distance to Dubai, it's 1,200 plus kilometers. We also have what we call the Western Gateway in the Red Sea. So you have the port of Jeddah, you have King Abdullah, you have Yanbu, you have Yazan. So there are options available, just some are much closer, which makes it easier. Some are further distant.
In terms of risk surcharges, I've heard, and I don't know, how much of a basis there is in truth of this, but I've heard of surcharges of $800 to $2,000 a container. What can you do, or are you doing, to help small to medium businesses, the SMEs in the region, absorb these kinds of costs? I don't know if you can confirm or deny those costs, if you like, without having to pass it on to consumers.
So it's true that the carrier have imposed certain surcharges, and that's typically to take into account for cost of the vessels, not being able to discharge cargo, insurance premiums, etc. So there is real cost behind. We are doing the utmost to help, but of course we are the middleman in between. So if carrier impose the charges, ultimately there's limited options we have as the forwarder in the middle.
It's just the way it is at the moment, I guess. The UAE airport's under considerable pressure, limited operations at the moment, but it's beginning, the backlog is clearing, of course. To what extent has the Riyadh and the Muscat pivot, if you like, conserved the regional air cargo network?
Actually, it's a very good point. So Muscat is currently operating at double of what they normally operate. So Riyadh and Muscat have taken a lot of load, and they have helped us to manage the situation pretty well. So what we're doing a lot is that we fly much more into Riyadh and Muscat and then truck it to the end destinations, because certain airspaces have been restricted, certain airspaces have been closed across the Gulf the entire time. However, because of that flexibility in the network, we have been able to serve everybody, and as I said earlier, pretty much worked through all the backlogs and are pretty much online.
I'm listening to you, and my observation is kind of that supply chains react. Not seamlessly is the wrong word, but it seems as though things kick into gear and there are multiple transport modes activated when you get this kind of immediate disruption. I guess the COVID experience has contributed a great deal to that.
I think COVID definitely helped because we very quickly got all together. We always say in normal times, trade is like water. It will find its way to flow through. And I think it's also true in this crisis that we see supply chains adopt very quickly, very fast, and it finds its way.
What are the first moves that you make as a logistic company when volatility spikes across a whole network in a region like this?
I mean, the first thing we did, and most importantly, it's a bit like in a plane, right? So in an emergency, first you look after your own people. Have your own people, everybody safe, everybody accounted for, which luckily till today we can say for all of DHL in this region. Then secondly, what was very important is to get the whole global network, all our players together so that everybody's informed of what is happening, what is possible, where do we have certain limitations. And we did have daily calls with my global board colleagues, with the whole network across the world, because we have 200 plus countries and territories we serve, and everybody needs to know if they send cargo into this region, what does it mean, how do we do it, what are the best options at hand. And then also very importantly, we very quickly started informing all our customers. So we had the crisis start on Saturday 28th. Monday the 2nd in the morning, we had our first webinar where we organized a session across all DHL divisions to inform our customers of what is happening, what can you do, and we kept that webinar on a daily basis and a very regular basis to ensure everybody knows exactly what is possible, what is not possible, where they have to expect certain delays, and it has been quite an intense time.
So communication, as much as moving stuff about, communication is really, really important.
It's essential. I think it's one of the key essential success factors in this current times.
How do you maintain continuity when both infrastructure and routes are, unpredictable?
Well, you always have what we call BCPs, business continuity plans.
Right.
So we have a business continuity plan, and we typically have a second or third one because we know your first plan B can also become plan C and plan D. Perhaps a bit like in Formula One, when you look at the strategies they have for tires, you need to be prepared for anything which happens.
So you got your slicks and your wets and all that.
Everything.
Which of the sectors what sectors are most exposed at the moment? Is it energy, food, manufacturing, pharma?
I think every sector is impacted because the Middle East is a global logistics hub, right? So I think there is clearly all sectors being impacted. What we can say in general is that food, perishables, and pharmaceuticals have currently priority. I mean, again, keeping everybody safe, keeping food supplies reliable is of importance, and that's understood by all the players in the market.
What about disruptions to energy infrastructure? How does that feed into broader logistics challenges for you?
I think the one topic which I think we all have seen and heard about is, of course, the impact it has on fuel price and oil prices, which is a key factor for us in terms of the costing we have on supply chains. So there is currently, for sure, a certain impact, and it will continue to impact the whole logistics world, I think, on a global basis.
I feel as though I'm firing loads of questions at you, Tobias, and I don't mean to. I'm just aware that you have limited time. Obviously, you're busy at the moment. Can I ask you about the Oman to UAE corridor? Just how congested is the border right now, and what have you been doing with customs authorities to create, green lanes for the perishables that you've mentioned?
Yeah, you're talking about the green corridor. So I think overall authorities across the Middle East have been amazing in how quickly they have adopted and simplified a lot of the regulations. So typically, looking back 3 weeks ago, if you would bring cargo via Oman into the UAE, you would have first to import the cargo into Oman. Technically, if you don't have an entity there, it's not so easy. then you would have to do an export from the Oman to the UAE. So it's a lot of paperwork needed, extra cost, complication. That was massively simplified. Now we can just do a transit clearance. So pretty much it arrives in Oman. We do one piece of paper which says that cargo actually goes to the UAE, and we can very smoothly transition it. The borders are so far working very well. There is no congestions at the moment. So all is flowing as it is supposed to flow.
That's good to hear. What about costs? Let's come back to that just briefly in terms of fuel, in terms of insurance.
Good morning, it's 10:30 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. These are the headlines. Financial reports show the Philippine peso has dropped past 60 against the US dollar. Other currencies in the region like the Indonesian rupiah and Vietnamese dong are also weaker. The Chinese yuan is losing value more slowly, supported by its large economy and reserves. Experts say the decline is caused by the Middle East war and rising oil prices. Countries with high inflation and trade deficits, such as the Philippines and Thailand, are feeling the impact more strongly. Fuel prices are rising worldwide. Reports show dozens of countries have increased retail fuel prices this month. The hikes vary depending on local taxes and supply pressures. Meanwhile, the UAE is expected to announce April petrol and diesel rates tomorrow, according to local reports. Experts link the increases to higher crude prices and global uncertainty. Reuters reports that Australia is taking steps to ease rising fuel costs. Australian Prime Minister Anthony Albanese has announced a temporary halving of the excise tax on petrol and diesel for 3 months. The measure is expected to reduce prices by around 26 cents per litre. Officials say the government is also supporting spot fuel cargoes to maintain supply stability. The average retail price of a litre of diesel rose to more than $3 Australian in Australia last week, and petrol to $2.50 Australian, according to a March 29th report from the Australian Petroleum Institute. China has increased the limit on how much its investors can put into foreign markets. This is the biggest boost since 2021, and it will let Chinese institutions buy more foreign stocks and funds. Experts say this move is aimed at helping China's investors diversify globally and connect more with world markets. A report on Yahoo Finance says this quota expansion signals Beijing's push to integrate more global financial markets. This is the news for now. Follow more news on our website, mirabusiness.fm.
The Morning Drive, it's Mira Business FM. How event cancellations are hitting the economy. That is the topic next. It's coming up.
Mira Business FM. The sound of success.
It's Mira Business FM. The UAE's event scene is a vibrant scene. Concerts, festivals, there are major global gatherings, but it's hit pause amidst regional tensions. Some events are on hold. The biggest story, though, might be one of resilience. The UAE's built one of the world's most dynamic, I think it's fair to say, tourism and events economies. History has shown that it has a strong ability to bounce back. But what is the real economic impact when it is disrupted? And could this actually set the stage for an even stronger rebound? Those are some of the questions. Joining us to discuss those, Dr. Jelena Junusovic is Associate Professor and Deputy Global Head of Accounting, Economics and Finance at Edinburgh Business School, Heriot-Watt University in Dubai. Dr. Jelena, it's good to be able to welcome you back.
Thank you so much. Good morning. I hope you can hear me well. Thank you for having me, and good morning to your listeners.
We've got you perfectly well over Zoom. I can hear you fine. Thanks for coming back on. To begin with, can you quantify the importance of the events and the concert sector to the UAE economy? Can you put that in context for us?
Yes, absolutely. Thank you. And we discussed this several weeks ago. We had a little bit different perspective at the moment, right? The events were a little bit different, but absolutely. Events and concert sector in UAE is having really a strategic economic role. And it is not simply the part of the entertainment industry. It's really acting as a high impact demand generator within the non-oil economy, which is activating aviation, hospitality, retail, transport, and the broader service sector and service ecosystem simultaneously. So from a macroeconomic perspective, this sector contributes through the tourism inflows as a form of a service export, because tourism is actually export. It is also contributing through the high value consumption and global positioning of the UAE as a destination. So event-driven demand is extremely valuable and actually very specific for the international events is the 30 to 50% of attendees are non-residents. So these are international visitors who are, as experience, spending 20 to 40% more per them than average tourists. So for UAE events, and this is very important to stress, are not peripheral, they are embedded in the UAE economic diversification strategy.
It's important to remember that. I mean, in recent weeks, we've seen high-profile shows by Amr Diab, the Wu-Tang Clan, Christina Aguilera, Shakira at the Off-Limits Festival, all postponed. Art Dubai, Arabian travel market have been pushed back. A World Economic Forum conference scheduled in Jeddah next month has been postponed. F1 in Saudi Arabia and Bahrain obviously cancelled as well. From an accounting and finance perspective, when a global tour is left to dangle in the UAE, in the region, what's the immediate velocity of loss for the local ecosystem, from travel to hotels to freelance tech crews to audiences and beyond?
Yeah. Well, if you allow, I would like to stress that what we are currently observing is best understood as a geopolitical shock translated into economic confidence shock, particularly as we said, through the tourism, aviation, and events. But what is important to mention is that this is not a reflection of weakness within the economy itself in UAE or Middle East. So this is externally driven disruption that is obviously affecting mobility, consumer behavior, and short-term decision-making. And short-term is extremely important a point here. So to put it into the scale, into the context, so global estimates are suggesting that travel and tourism activity is currently losing around 600 million per day, which is just to highlight the intensity of this shock, okay? But this is more front-loaded and cyclical rather than structural, and this is really important. Now, as I said, short term, and as you very well recognize, is maybe the key point here. And yes, this is a short term shock still. And in the short term, the impact is immediate, that is immediate, and that is concentrated actually, and particularly in the sectors that depend on timing and that depend on volume. So what we are seeing in a short term is, first of all, the softer hotel occupancy during expected peak periods, airline disruptions, capacity adjustments in the airlines, reduced activity across retail, reduced activity across hospitality in general. So there are some data that are suggesting that there were over 80,000 travel bookings cancelled in Dubai within just first week of the heightened tensions, and regional tourism could decline by 10 to 25% in 2026. But this depends definitely how long the uncertainty persists. So from economic point of view, this is temporal demand shock. So as you stress mentioning all these events, majority of them are not cancelled, they are postponed. So they are not temporarily lost. However, this is more on the macroeconomic and the economy perspective, overall country. But we shouldn't forget that there are, at the firm level, these are more acute. So businesses like SMEs, entrepreneurs, they are facing with the cash flow pressures and operational shocks. So expected revenues are postponed while costs remain fixed. And this is the point from accountancy, from financial point of view. You have fixed costs, which are quite big especially in hospitality and service sector. And they persist, right? No matter if there is activity, if there is revenue, so these costs still have to be covered, and that's why the shock is big. So this operational efficiency, the deal with liquidity, is quite acute for the SMEs and entrepreneurs, and then longer the period of this shock is, then the more bigger the effects and negative effects are. So yes, this is still a short-term impact. So let's hope it will stay like that.
It's a very tough time, particularly for the smaller event management firms that rely, and the hospitality firms that rely on the Q1, Q2 peak season. Dr. Elena, which industries tend to feel the impact of the tensions that we're experiencing now first, and which recover the fastest?
Yeah, so there is actually this transmission of the shock actually is following very clear economic pattern. So the first sectors that are affected are those that are very much dependent on the advanced bookings and the fixed scheduling. So primarily airlines, hotels, event organizers. Then the second layer, the second round of impact is felt in the sectors that rely on a footfall, so like restaurants, retail, local transport. So from financial perspective, this intensity of impact is amplified by the operating leverage. And I'm again stressing here operating leverage, again, fixed cost, which can even exceed 60% of the total cost in hospitality, actually mean that even more the small drop in demand actually can significantly affect profitability. Now, in terms of the recovery, aviation and hospitality actually tend to rebound quite fast due to dynamic pricing that is specific for them, and actually flexibility when it comes to the capacity. Then this is followed by retail and food services, where spending actually is typically deferred rather than completely eliminated.
The UAE has navigated disruptions before. Expo 2020 had to be delayed for a full year, unexpectedly, because of COVID, of course. And that turned out to be, I think it would be fair to say, pretty huge success. What is it here in the UAE that adds up to such a strong recovery model?
Yeah, this is actually where especially all of us who are living and working in UAE for many years, we witness that really very strong recovery model and resilience in UAE. And probably this is where I would say optimism is coming, that we are all waiting for a moment that this situation ends, and then we really expect a fast recovery. And this UAE resilience actually is not something that is ad hoc or that is happening from moment to moment and responding to different situations. This is really structural rather than situational. You mentioned already several occasions when we really witnessed how quickly and how successfully UAE recovered. And where these structural resilience lay in is first, it has already invested heavily in a world-class infrastructure, and we shouldn't forget that. So airports in UAE, airlines, venues, hospitality, this is all allowing for very rapid reactivation without any additional capital investment. This is extremely important. Then UAE is positioned as a global connectivity hub. And this is still enabling a quick return of international flows once the conditions stabilize. And of course, very important, and this is really specific of the UAE, is that institutions, so institutionally, there is a strong agility. So UAE demonstrating during previous disruptions like crisis in 2008, COVID especially, where there is this coordinated response, and this coordinated response is actually helping the activities restore much quickly and more successfully. UAE, at the moment, though there is a disruption in extremely, really stressful events and really critical economic the disruption that is happening, but we are still seeing ongoing investment activity in the UAE. And this is signaling that investors are very clearly distinguishing short-term geopolitical risk and long-term economic fundamentals. So there is still confidence in a later, and all these events that are postponed rather than cancelled are a good indicator.
There's an element, isn't there, that if you postpone something rather than cancel it, you preserve value.
Exactly, and this is actually critical distinction from economic point of view and from financial point of view and perspective. Postponement actually preserves demand curve, while on another side, cancellation will destroy it. So we still have economic value preserved. Actually, in many cases, some data are suggesting that between 17 to 90% of ticket demand is retained when events are rescheduled, meaning that revenue is not lost, it is just shifted across the time. Of course, this is not easy, and a key point here, I mentioned previously, key variable here is duration. So if uncertainty persists, then postponements may eventually convert into the cancellation. And then, of course, we can see more permanent economic effect, absolutely.
How about in terms of pent-up demand? Something I think we saw after 2020, is reasonable to say. There was a massive surge in what was almost like revenge spending on entertainment, kind of. Could we be looking at a rebound effect for, I don't know, late 2026? If these shows that we've mentioned, some of these shows, are rescheduled for Q4, do we see a double-digit spike in GDP contribution then, maybe?
Yeah, I strongly believe in that, and that what I'm saying just now is based on the previous experience. And yes, actually, this is very important dynamic. When consumers delay travel or even participation, they typically reallocate rather than cancel those activities, and this creates pent-up demand, which can actually lead to compressed recovery phase. Actually, historically, this is shown that it can really result in 10 to 20% surge in demand once the conditions stabilize and as postponed consumption actually returns in a concentrated period. So paradoxically, actually, sometimes short-term disruptions can lead to even stronger than expected performance during recovery, and this could really happen here.
I'm so hopeful that happens, I have to say. Dr. Yelena, you're an associate professor of finance. You look at fine print day to day. You understand how to get to the crux of the matter, even if you are looking at the fine print. How might some of this disruption be mitigated, perhaps, by force majeure clauses in, the insurance around, cancelled events?
Yeah. Well, I would say that we are already seeing some signs of resilience. I know it's very tough time, and especially for individuals, for residents, it's really the uncertainty is huge, right? And you know, in finance and economics, there is a big distinction between risk and uncertainty. Risk is something to which we can assign probability, right? So we can create scenarios and say, in this scenario, we can give probability of 20, 30%, and so on. With uncertainty, you can't do that. And uncertainty is very much linked with the time. So with duration, so longer the duration uncertainty is higher, and this is where, you know, the economics and the finance is struggling then to provide, and any expert is not really keen to provide any estimates. But there are certain signs that we shouldn't disregard, and of resilience within the industry, and this is really important in that regard. So there are certain signs of adoptions already. So we all face that airlines are very successfully and strongly adjusting routes and capacity. So even in a situation of a war, we are seeing that airlines are still operating, that flights are happening. So this is extremely important, and this is not very usual situation. So UAE is reacting very, very well. So airlines are adjusting routes, they are adjusting capacities. Even so, organizers, as I said, they are still rescheduling. Hospitality providers are also adjusting and adapting pricing strategies. So from financial perspective, this actually reflects market flexibility rather than the system stress. So we can say that we are seeing early signals of recovery potential through forward-looking indicators. There are some indicators showing that there are airline bookings and travel trends which tend to recover actually before activity resumes. Now, one thing that is very important that I want to stress here is the infrastructure in UAE is one of the strongest advantages, and this is where my optimism is also coming from. So this country has built capacity to handle tens of millions of visitors annually, with Dubai International Airport alone handling close to 90 million passengers just pre-disruption. So this means that recovery is not constrained by capacity, and this is extremely important. So recovery is actually driven by demand reactivation. And in this situation, once the things are getting back to normal, we can actually see that demand reactivation really rapidly recovering. So in economic terms, this significantly reduces recovery time because the system is already in place and it is operational.
It's interesting, I was going to ask you about infrastructure because unlike many global cities, Dubai, Abu Dhabi own the entire value chain, the airlines, the venues, the hotels. So there's an integrated ownership model, and I wonder if that will help the UAE bounce back even faster than a city that relies on a more fragmented approach with lots more private operators.
Oh, absolutely. I think this is really a critical thing. As I mentioned at the very beginning, UAE has already that infrastructure in terms of really world-class airline, airports, hospitality system, travel. So this is so practically once this ends, we do not expect significant or any capital investment, and this is extremely important from the finance and economic perspective because we can just resume activities very quickly. Now, of course, when it comes to events, tourism, destination generally, right? It's a lot about the trust, and this affects the behavior, tourist behavior, event participants, event organizers, right, who are coming from abroad. So we have to, so that trust should be there. The current reaction of the government to the attacks, responses, and success of interception, this is building trust also. Having that infrastructure already and capacities and ability, as I said, to be agile, to to fast react and be flexible, to have this coordinated institutional agility. This is extremely important, and this is where the trust is that the recovery can be quite fast. I mentioned the event organizers who are coming outside of the country, and so maybe sometimes us who are within the country, right? We sometimes maybe do not have the whole picture, but actually, when we look at the reactions and behaviors of those who are coming outside, like suppliers, event organizers in this particular situation, global event organizers are stakeholders who are highly responsive to stability and demand conditions. So this is where trust is playing a big role. So they prioritize destinations that offer reliable infrastructure, that have a strong audience demand, and that have operational certainty. So the UAE, we shouldn't forget, meets consistently these criteria, which is why historically organizers return quickly once conditions stabilize. Which we saw in as you said, COVID, Expo 2020, and so on. So often maintaining these long-term commitments to the market.
Well, there were many questions and answered, I guess. The experience of COVID has helped in many ways. I mean, the hope is that this is a moment that could actually strengthen the UAE's reputation as a reliable global events hub, depending on the bounce back, of course. But what indicators should businesses watch to gauge when, recovery is really underway?
Yeah, absolutely. Indicators is something to watch. The most important indicators are leading, not lagging. And this is this forward airline booking, hotel reservation trends, look for event rescheduling. Again, very important signal is that events are not canceled, they're rescheduled. Then online travel surge behavior, these are the indicators to look for. And this is something that actually is at the moment providing early signals of confidence returning, which is the key driver of recovery. Now we will see how quickly the country will recover, and that again depends very much on the duration of this disruption. But yeah, I think that if in the best case scenario, if this is if the activities is to resume in a couple of weeks, not more than, let's say, 1 or 2 months, then we can see the recovery maybe that can be within some 1 to 2 quarters based on the previous disruption patterns. But again, as I really want to stress here that the critical variable here is really not infrastructure, it's not capacity to recover, it is really the speed at which perceived risk declines and confidence returns. So trust, confidence, and how the risk is perceived is definitely something that will influence the recovery.
It makes a lot of sense. It really does. Lessons from the COVID era are being learned, and we are applying them, of course. Dr. Yelena Yanusovic is Associate Professor, Deputy Global Head of Accounting, Economics and Finance at Edinburgh Business School, Heriot-Watt University, based here in Dubai. Dr. Yelena, pleasure to have you back on. Thank you for joining us again.
Thank you for having me, and have a lovely day ahead. And take care, stay safe.
Thank you very much for joining us. Dr. Yelena Yanusovic here on Mira Business FM.
Mira Business FM, Dubai's home of business radio.
Good morning, it's 11 a.m. I'm Sahar Mushtaq and this is the news on Mira Business FM. These are the headlines. Rain is expected across parts of the UAE from March 31st through April 1st. The National Center of Meteorology says skies will be partly cloudy at times and they will turn cloudy in some areas. There is a chance of light to moderate rainfall. This will affect several regions. Weather conditions may become unstable in coastal areas. Temperatures are expected to drop slightly. It will feel cooler during the day. Authorities say that there is no need for heightened concern at this stage. UAE Airlines are continuing to expand their global network. Local media reports show that carriers now operate flights to more than 250 destinations worldwide. Airlines including Emirates, Etihad Fly, Dubai, and Air Arabia are adding new routes. They're also increasing flight frequencies. These expansions will cover Europe, Asia, and North America. The growth reflects strong travel demand. It also highlights the UAE's role as a global aviation hub. This comes despite the ongoing airspace disruptions. Regional tensions are still affecting the air travel. Fuel prices are rising worldwide. Reports show dozens of countries have increased retail fuel prices for this month. The hikes vary depending on local taxes and supply pressures. Meanwhile, the UAE is expected to announce April petrol and diesel rates tomorrow, according to local reports. Experts link the increases to higher crude prices and global uncertainty. Reuters reports that Australia is taking steps to ease rising fuel costs. Australian Prime Minister Anthony Albanese has announced a temporary halving of the excise tax on petrol and diesel for 3 months. The measure is expected to reduce prices by around 26 cents per litre. Officials say the government is also supporting spot fuel cargoes to maintain supply stability. The average retail price for a litre of diesel rose to more than $3 Australian in Australia last week, and petrol to over $2 or Australian dollars, according to the 29th March report from the Australian Petroleum Institute. China has increased the limit on how much its investors can put into foreign markets. This is the biggest boost since 2021, and this will let Chinese institutions buy more foreign stocks and funds. Experts say that this move is aimed at helping China's investors diversify globally and connect more with world markets. A report on Yahoo Finance says this quota expansion signals Beijing's push to integrate more with global financial markets. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, Dubai's home of business radio.
This is the Morning Drive. It's Mira Business FM. My name's Tim Elliott. Now, a month ago, construction in the Middle East was focused on growth. It was focused on new product launches. The tone, however, has shifted. We're seeing rising oil prices, pressure on shipping routes, and geopolitical tensions are creating new challenges for developers, for contractors. It's impacting timelines, procurement, and costs. Lots to discuss in this particular area. What does it mean for project delivery? Is our main question next, and how are teams adapting? Gilbert Bustani is the Vice President at 3D Consultants, the Shalhoub Group, joins me in the studio. Gilbert, good to have you here.
Thank you, Tim. Good morning.
Thank you as well for braving the rains and the flooding this morning. It seems as though something is conspiring to keep us at home at the moment. Just a month ago, Gilbert, the talk was all about Giga Project awards. It's amazing, isn't it, how quickly the industry mood has gone from growth to caution in such a short space of time.
Well, definitely the tone is much more measured today. We've shifted from having a mega focus on growth, launching big projects, achieving those times, delivery times that are unrealistic, and figuring them out, how we're going to deliver those projects, to a very well-measured tone on those projects. We haven't seen projects being put on hold yet. In very few cases, yes, being pushed to other quarters towards the end of the year or maybe early next year. But we're not yet in a scenario where projects are being cancelled or something as such. But definitely it has shifted, and it has shifted fast. That mindset that we were in at the beginning of Q1 earlier this year has shifted, and it has shifted in a matter of days and in a matter of 2 to 3 weeks. We're in a different mindset today and in a different environment today than when we were at the beginning of the year in January.
It certainly seems that way. It's kind of from how fast can we build to how do we protect what we have. That there really has been a shift. Can you characterize the main risks currently impacting construction projects I guess across the region, actually?
Well, projects risks as such are directly, the minute you say what are the risks on a project, you directly speak about the budget of a project and the timeline of a project.
Sure.
And the cherry on the pie on this one this time is supply chain, which has added a spice into to all of this. And the big one is that this time they are very much connected, which is adding a massive challenge to how do you manage one and try to make it a bit independent than the other, which is impossible because supply chain is triggering the whole thing, obviously, this time. And it has a massive direct impact on the project budget that was set several months ago prior to start any project. And obviously, those timelines that now have been pushed weeks and months down the road. So it's a supply chain problem that we're navigating through. It's a budget that has to be revised at one point in time, and it can trigger a value engineering exercise, or it can trigger an add to a couple of figures to it in order to see how we can deliver that project with the additional costs coming from supply chain. And obviously, it's a timeline pressure that we have to figure out how we can still deliver that project within that timeline set, or probably a revised timeline. So it's that combining three massive challenges together and how they are interlinked among themselves. So it's that risk that we are looking at, that every project manager, every contractor, and obviously every developer is looking at figuring them out as we speak.
You've said recently, I was reading last night, that the earliest visible effect of the current conflict isn't necessarily overruns, it's timing uncertainty. We've got lots of ships currently at anchor in the Gulf, clearly. But how do you rebase project calendars at the moment?
Well, you definitely look at your resource management to start with, combined with the risk factors. You try to identify those risks and see what can I mitigate, how can I mitigate them, what can I figure risks, how can I figure risks before they actually happen. We've been good enough. Every project manager, every contractor has gained enough experience throughout the years in this part of the world, coming out of the events of 2020, 2021, and a few years before that, the financial crisis. We've gained enough experience to look at risks, identify them, and figure them out before they actually happen. But add to it the supply chain. We had an experience managing supply chain issues a year ago, the Red Sea channel and so on. So we know our way around this, but the challenge on top of all these challenges is that the frequency of these events happening again and again and again and again. So the thing is that when you combine all these challenges and you combine the solutions of how we are trying to resolve these challenges, it builds up and it adds additional milestones to the initial milestone you have on that program, and you end up by either pushing that schedule, that handover date, or you end up by suggesting that we need to do certain changes on a project in order to maintain that. So we are in the business of finding solutions to those challenges, to those problems, in order to either maintain a budget or to increase a budget or to decrease a budget. And the same thing goes to the work schedule, to the program. There's always solutions how to maintain a program as such, and there's always solutions for how do you increase your dates by adding certain dates to the program and the handover date. So by looking at the activities you have on a project, the milestones that are driven by the things that have changed throughout the project since day one.
There are always solutions, but there are some tough questions to answer, of course. You must think sometimes financial crisis, COVID situation now, geopolitical uncertainty. You must think, oh, not again. There must be an element of that.
Well, sometimes we do think that when is the next thing happening?
Sure.
It kind of makes you ready. It kind of makes you good at planning, which has improved our planning exercises over and over again, because we kind of increase that buffer on the working schedule, that buffer on the budgets when we do plan things, because we know something might happen. Traditionally, we know projects are elements where things can go wrong throughout the project life cycle. So we do integrate those buffer zones on the schedule, on the budget, and so on. And we've gained, as you rightfully said, over the years, we've gained that experience that, okay, we live in this world, we're in this region where things might happen. Historically, every 3-4 years, we're facing events, extraordinary events, I would say. So let's be ready for that. And all that thinking, all that methodology of how we do things is towards delivering a project within that budget allocated, within that timeline allocated, in order to safeguard the objectives set by the developer or the investor. So, and this is where the importance of a project delivery team, be it a project manager or an architect of record or these key stakeholders that do come in on a project in order to safeguard the objectives set.
Let me look at some specific issues that you're facing in the industry at the moment. Construction, GCC construction, we're heavily reliant on imported steel, mechanical components. The strait is effectively closed. So are you seeing a viable shift towards more land-based logistics as part of the measures that you're taking? The kind of Hormuz bypass pipeline, if you like, the ports in Fujairah, the Red Sea.
Those are key ports.
Sure.
And they will always be. We not the expert on the topic, but definitely as someone in the industry that rely heavily on supply chain in order to import materials, similar to any contractor or developer in the region. We know that those ports are extremely important channels to bring in construction materials, similar to other elements. And we do know that those will remain very important. However, given the circumstances that we live in, given the challenges we're going through, coming out of the events of year 2020, we also know that we need a plan B. we need other routes to go through. We need other routes to build into our resource management, supply chain management strategies, and not only rely on that as well. So we are looking at road channels going through Saudi all the way to the Jeddah port, overlooking the Red Sea. We are looking at other options. Obviously, the whole region is looking at that, not only us. A and B, we are definitely looking and pushing local supply chain in terms of local fabrication, in terms of local production, and this is extremely important for the survival of this region, not only on the construction material elements, but on other sectors, be it food, be it water, be it. So the more we push local manufacturing, local production, the more it becomes a better ecosystem, a better sustainable system for this region to survive and not to be 100% dependent on what comes from abroad. However, we're here. We're not there yet in terms of how much can we produce locally. We've improved a lot since the year 2020 till now. So a plan B, as I said, is definitely in the make. We are looking at roadmaps coming all the way through the Jeddah. I think if I'm not mistaken, the UAE government have already launched the train.
Etihad Rail has had
rail,
some impact
yes,
on logistics for sure.
So there is a lot of options that are being developed. Sadly enough, they're not ready yet, but I think we will see how much they will be pushing them, speeding those plans in order to see other routes not going through the Hormuz road. Let's see.
Straight. Yeah. If freight rates are up, there are quotations of 50%, 80%, whatever the percentage is, they are up. How do contractors handle fixed price contracts when the cost of getting, steel to a site, for example, changes or can potentially change almost minute by minute? It's a tough time.
Well, tough time, and that's basically. I hope none of them are listening today to me because it's a conversation I have every day with
sure you do.
with some of our contractors. Well, it is extremely difficult, challenging times. Imagine you're on a project with a set budget, deals are done, you've booked your materials, and halfway through the project, prices have gone up, and you have to revise this. So you're going back, drawing boards, you're just looking at options how to change that, and you're looking at options on how you can increase the budget because of the situation you're in. So, but reality is prices are increasing, and steel is a major factor, major element that is driving the factor of prices going up. But it's not only steel, a lot of other materials.
Sure.
Be it the availability of the materials in the UAE or in the KSA market that have just gone. So now if you need to buy anything else, you just need to ship them. And as you rightfully said, the prices of containers and shipping have doubled in certain cases or have simply increased beyond what has been budgeted for at the initial stage of a project. So this is where it's a very tough conversation we're having today between with contractors and with developers and investors, where project owners have set a budget, have locked those figures, and have launched a project. And today, contractors are coming saying that we have a certain situation where the prices have gone up. Metal, lighting, flooring, any building material have simply gone up. How can we sustain? How can we deliver this project? So, and we're trying to find ways to collaborate, to find solutions to mediate, to find solutions, because the last thing you want is to reach a point where a project stops. We've seen this in the past, by the way. So we don't want to reach to that point again, where a project stops because of something like this, where it is a reality that we are going through, and it is a reality that we need to find a solution for. Otherwise, those ongoing projects, I'm specifically talking about the ongoing projects, are going to face massive challenges and a big risk of stopping in the coming few months. Now, the bigger problem for me are not those, because you'll always find a solution for those. And there's always, and this is our role, to find a solution, be it redesigning, rescaling, do some value engineering, we'll find a solution. and worst case scenario, you'll stop a project. But the big uncertainty today is the upcoming projects, the future. How will you be able to price new projects if you haven't reached certain stability on the market on certain materials? Upcoming projects that have been thought of that will meet certain budgets, or historically we know that project will cost you X amount of dollars per square meter. Today is up, down by the minute, depending on who says what, and the oil prices and the gold prices and certain material prices. So that shift in the market is causing a lot of disruption that is putting future planning at high risks. And that might cause, if not is causing already, that projects might be delayed. Projects might be pushed from a Q3, Q4 to a Q1, Q2, if not more, until that market stabilizes in full, and with it the material stabilizes in full, and then we can launch project. Because the last thing you want to do is launch a project at the wrong cost.
Well, that's interesting, because we're in this, and I think I use this phrase in every interview of every half hour of this show at the moment, but we're in a holding pattern, aren't we? And it is waiting to see what will happen. The uncertainty is leading that, and nobody knows. It's not as though you can flick a switch and it's right, now we're back to normal. It's not going to be like that. So we have to face it. You're talking to developers and contractors constantly. What are you hearing? Anecdotally, what's the... I don't love this phrase, the gossip around the water cooler, but you know what I mean, Gilbert.
See, I'll tell you what we know is happening, what we see is happening, but I also would like to talk about the positives. Okay. Obviously, we're in a standstill situation. Yep. Everyone is holding, waiting to see what's next, and hoping for a certain stabilization of a situation, of the market, of the prices, so they can plan accordingly. And this is going to be a problem. If you start delaying planning, launching of new projects because of these uncertainties, it means you're pushing the construction industry into further delays. And we all know how big role the construction industry plays in the overall economy. Yeah. So we're definitely in there. There's no, we shouldn't be shying away from saying that the whole industry is undergoing a massive challenge due to these circumstances, and we will definitely be pushing it will be definitely pushing all these projects down the road. Now, the positives, what we historically been facing, that clashes, that fight between developers, investors, and contractors and suppliers on every project, at every corner of a project, we're seeing good collaboration today between those stakeholders, try to find solutions. Developers, investors, project owners, they want visibility. They want to know what's happening. They want to see when their projects are going to happen, how they will happen, at what cost, how is the delays impacting their project, how is these massive cost increases are going to increase their budget. So they want control, they want visibility, and contractors want to see how they can revise those timelines and so on. So this is causing a good collaboration because both stakeholders are looking at it from different angles, but towards the same objective. So that is causing a good collaboration, increased systems and ways of doing planning, revising the planning today, but tomorrow, at the end of this, I think we will be looking at a better planning when we launch projects, a better planning and a better collaboration as we run projects. So that's the positives I see out of all of this. Let me say all of it.
You take a really positive view, but you're really...
Well, we have to.
We do. Well, better to be positive than negative. It doesn't help to be negative, does it? That's a fair point. But you take a real solutions-focused approach to this. Again, because, I mean, you're running up against issues, I guess, constantly with all the different stakeholders in projects. I don't want to say you're used to this or it's old hand to you, but there is an element of, Okay, here's another problem. And you have no choice but to face what's in front of you.
I always say this to the team when we're in a crisis management meeting or simply in one of those tough meetings. We're in the business of finding solutions to problems we have on projects. So whether we've over the years we're used to it or whether simply we are in that kind of business. This is what project management, one of the things project management is all about. Forecast the problem and try to resolve it before it happens. And this is how I find how successful projects are delivered. Just forecast them, find solutions for them, and just try as much as possible, bring people around the table to collaborate, to find the right planning, the right balance in order to achieve project objectives, which is obviously hitting those targets on time, on budget, and on certain standards and qualities.
For sure. We have to go to the news. Are you able to stay around for a few more minutes after
Would
the
love
news?
to.
I've got lots more questions to ask.
Would
you.
love to.
And I guess they're kind of tumbling around the tumbleweed in my brain at the moment. Gilbert Bastani is with us this morning on Mira Business FM. He's the Vice President of 3D Consultants, part of the Shalhoub Group. More in a moment. Right now, it's the news. It's Mira Business FM. It's the morning drive. We're talking construction project delivery in the Middle East right now. My guest is Gilbert Bastani. He is Vice President of 3D Consultants as part of the Shalhoub Group. Gilbert, thank you for staying around. I'm taking more of your time, but lots to ask you. And something I wanted to ask you just now, something that's bubbling through. It's a phrase that I keep hearing. What we're facing is obviously a regional issue, and it comes from all countries across the GCC. Rephasing is the phrase that I hear constantly. Does that mean projects are being cancelled, or are they simply being slowed down? Because you've got to match, as you pointed out a number of times, the reality of the supply chain, I guess, at the moment.
That's the word we do not like.
I can imagine.
Unless we really have to, or unless the project dictates that you do deliver a project in phases. However, if you look at the region, how much changes and how much challenges it has faced, and what we are looking at today, this has become one of the practices we do look at every time we are facing a challenge. And this is where we look at doing things in phases or rephasing, as you rightfully said. Right. So yes, this is another way of saying you're delaying delivery of a project or parts of a project, and with it you're catching a bit of a break on that budget expenditure, or delivering parts of a project for whatever reason it may be it you're not ready to deliver the whole project. Your consumers are not ready. You're not ready to sell that part of the project if it's a residential project, or that part of the mall, or that part of the office or the warehouse. So it depends on the business you're in. It makes sense to probably rephase it and push certain parts of it. It makes sense to rephase it and push parts of the delivery of the project if financially you are in a position where you would like to push that funding. So it does make sense. And this is where, once again, it puts project delivery teams, be it contractors or project managers, at work doing what they do at best to make sure we keep the momentum of delivering things at a certain standard, at a certain quality, within that logic of delivering things rightfully. However, putting a break between phase 1 and phase 2 and phase 3. This do come at a cost, obviously, when you're breaking that momentum, breaking that mobilization cost that you have put to start a project. It does increase the cost at one point, while it delays the expenditure of your capex. So there's a lot of things that goes into it. However, it gives you a break and it stretches the timelines.
What about the human element of this? Because we've got airspace closure, have had airspace disruptions, less so, lots of flight cancellations. There's a human dimension in project delivery. How do you manage that? so that you've got, the right people available? You've made sure you've got the right technical specialist with you, the right, I don't know, supervisory staff, for example.
This industry is similar to any other industry. It's all about the human capital.
Sure.
You don't have the right people. You're not delivering the right product. You're not delivering the right elements. And we're definitely impacted by what's happening for so many reasons, because the human capital is impacted with these events, be it not capable to show up to site, to office, to deliver what they are supposed to deliver for so many reasons, be it not the inability to reach where they're supposed to reach for so many reasons.
Yep.
B, simply because they are present, but they are undergoing certain challenges, be it back home or be it currently where we are. So there's so many factors that might impact and is impacting the human capital in order to deliver their projects, their work at their best or as they were supposed to deliver. That's a challenge. Another challenge, as you said, moving people from one place to another, as we've seen across the region, across the GCC, is becoming more and more. We have projects that we start in Dubai, but you finish delivering in Qatar or in Kuwait or across the border in Saudi, and vice versa. Those are heavily impacted today. Those are the projects that are literally have paused over the last couple of weeks because we couldn't manage to get someone on a plane to go see what's happening on site in Qatar or in Kuwait, or simply get a shipment of furniture that is produced in the IP in Dubai over to Saudi, or vice versa. So, and this is impacting the human capital in the sense of what do I do next and how do I do it? And once I get the chance to go and deliver that project, I have a backlog of milestones, of tasks that I need to deliver now in a shorter period of time. And that is putting a lot of pressure on the human capital. And then you have a new thing, a new challenge that we're facing is the shift of the human capital, be it leaving the region or be it moving from one place to another. That shift of talents that you grow in this region, and then because of certain events, you see them moving out of the region or within the region. So you have two channels that you're looking at. Exiting the region for these circumstances. We saw that in 2020. We saw it growing again after 2020. And now today, hopefully not, but we might be facing the same challenge where you see that pool of talents that are driving this industry might be shifting within the GCC again or out of the GCC to other regions. So those three sets of challenges on the human capital within this industry can drive results and will be driving actually results in how you deliver projects, be it driving them in terms of timelines or driving them in terms of quality.
Can I don't know, I want to get some of your knowledge here, your experience in the industry for a few minutes. Broadly speaking, how early in a project do the most serious risks, in your experience, usually begin to form?
I would say the most important phase on a project is that initiation phase, where you start developing your project charter, you develop that brief, you define who's doing what and how you're doing things and in what direction you're going. And obviously followed by that design stage where you put elements rightfully, you define your materials, you define your schedules, you define that planning phase as a whole is extremely important. The more you spend time on defining those elements, the more you spend time on making sure those elements are defined correctly. You set the tone on how you are going to go into other phases of the project. How your tendering exercise is going to go, and how you are going to select contractors and suppliers, and what budget you are going to navigate through, and most importantly, how you are going to execute that construction phase. The less you spend time during that planning, design, initiation phase, the more you're going to suffer throughout the project. So that experience that the team has, that knowledge that the team has on doing the right planning, doing the right design development as such, is extremely important, because they can make or break the tone of the project. And with it, you can go on site, and then you have a contractor who's fixing those problems of a missing information or a wrong information, or simply too much information that do not speak with each other, or they are not linked to each other. And then you spend time fixing things while you are actually or supposed to be spending time building things. So it's this. So for me, and I've always said that planning is the key driver and sets the tone on how fast, how correct you can go throughout the project.
You're more a solutions provider than a project deliverer in lots of ways, from what you're saying this morning. You know?
As I said, we're in the business of finding those challenges, and I'm not shy to say those challenges are problems in certain areas of the industry. People try to avoid using the word problems, and they cover them with the word challenge to make it less
For sure.
appealing. But then there are problems in certain areas. So there are challenges, there are problems. So our business, our existence is to find them, select them before we start, identify them, and try to find solutions for them before they actually happen. And the more we do this, and again, that's the planning phase, that's the initiation phase. The more we do that, the more we can run a project. I wouldn't say risk-free, I wouldn't say trouble-free, I wouldn't say we're going to navigate a project for a year or so without any of that. There's no fun in that either. But then you'll be running a project where you won't be surprised as much as you will be, but then you will be able to react when something happens. You'll be able to select the right solution for the challenges that happens, and you'll be able to pick the right lessons learned for future projects as well.
I know I've gone off slightly at a tangent, but I'm just interested, and I wanted to ask you about design stage issues, and if there's almost a set of really common issues that you face in the design stage that maybe knock on and cause problems, later on during the construction phase.
Well, as I said, design phase is part of that initiation phase, or the first step that follows, or the first phase that goes after the initiation phase. So I would summarize it in saying the more you develop that design, that concept into a design package, into a design element that is well defined in drawings, well defined in material selections, well defined in a comprehensive vendor package, where I know how I'm going to execute with my contractor. How are these elements speaking with each other? What kind of details I'm going to in order to execute certain parts of the project? Trying not to go into too much details, but so the more I have set the tone, the more I have set the direction to execute that concept, the more I have set a clear direction that will allow all the suppliers, contractors, to navigate fast and with a clarity. And whenever a challenge happens, and they will, whenever there's a clash somewhere on a certain part of the project, finding solutions to it would be simple, reasonable, or within reach. It's not something that will set you back to the drawing boards and set you back to square zero, because it was well defined during that design phase. So again, extremely important. That design phase is extremely important to set the tone, to set the direction, and that's part of that initiation phase that is extremely important.
It interests me because I think a lot of us view projects and the experience of the contractors, all of the people involved in the projects, as, okay, so it's designed, you buy the stuff, you build the stuff, and there we are with our new house. And that's the process. And of course, there's a lot more to it than that. You know what? There are a lot more variables in between. Let me ask you about some of the tech, a little bit on the tech aspects in terms of building information modeling, how that has impacted the way you work, and whether that helps you to identify those risks that you have to face that little bit earlier.
Well, those three phases that you've referred to are the big phases.
Sure.
That planning / design phase, followed by that tendering, that costing phase, where you define where am I buying this and who's the contractor, and eventually but there's, as you said as well, there's so many phases, there's so many sub-phases, there's so many things that are linked to deliver a successful project. And there are tools where it links all these phases together, and one of them, as you rightfully said, it's BIM. BIM is a very important tool that is launched during the design phase, where you plug in all that design elements, those design drawings on that software. It identifies clashes that you are facing. It gives you that visibility. It gives you that transparency. It gives you that clarity on how those building elements are all talking with each other, how they are interlinking with each other. It gives you that visibility. It gives you as one of our colleagues puts it, it's how your building is actually breathing, how that building is coming to life. And it shows you if you have problems at that early stages, if certain elements are clashing with, I'll give an example, if a wall is clashing with a pipe, or if you have a column that is clashing with a window. And so it gives you that visibility, and you're still at the drawing board stages. So with that, again, that concept design, that design stage, and that importance of it sets the tone. It gives you that clarity to resolve them. It gives you that clarity to address those challenges, be it accepting that challenge or be it resolve that challenge towards a faster execution, towards a simpler execution, or simply, but as I said, sometimes you say, okay, I have that challenge, I'm going to accept it, and I'm going to find ways how to execute it. And once I go into the execution phase, that BIM model will give you also the clarity on once things do surface during the execution phase, it gives you the option to resolve those challenges faster because it gives you that clarity. So BIM is a tool, probably one of the best tools out there that we use on big projects, obviously. Sadly, we cannot use it on small projects that go fast because it requires time, it requires capabilities to plug in all the information, and it requires constant updates as you go on a project. But it's an extremely important tool that we use at the beginning of the project and throughout the project, simply towards giving us clarity and visibility on how this building is interacting between all these elements, from mechanical, electrical, and obviously architectural elements. It gives us that visibility on where do I have problems, where do I have challenges, where do I have things that are not functioning correctly or collaborating correctly with each other, and gives me the option to resolve them.
I need to bring it back to where we are now, I guess. I'm a little bit off topic there, but I'm just interested to try and understand a little bit better how things work in the industry. And I guess I want to ask you more about, if you can put into context just how significant the moment is now in terms of risk to procurement and to supply chains in this current climate that we're in.
Massive. It's a simple, straightforward.
There's the answer. Thanks for coming.
Exactly. So thank you. Have a nice day. No, it is. Sadly, it is a massive impact. As we started this conversation, the massive on procurement, the impact is massive on procurement simply because of the supply chain challenges. So we do procure at large massively most of the elements through sea, abroad. Things are coming from abroad. So and what we have in stock here in our warehouses through the suppliers is never enough because of a booming industry, that construction industry here. So whatever you have here is either booked or already sold. So if you want something, you have to place an order and wait for it. So and the minute you tell me supply chain is facing a challenge, or the Hormuz Strait is blocked, or any of this, it means you're putting directly my resource management or my resource strategy at risk on any project, be it a small office of 50, 60 square meters or a mega project of thousands and thousands of square meters. So definitely procurement is navigating through massive challenges, as we said, and with it, risk management. So it's a ripple effect that starts with the supply chain, that starts with that resource strategy, but it's impacting risks, it's impacting strategies, it's impacting time strategies, and obviously it's impacting the cost at the end of the day.
Sure, and changes in sourcing materials, planning.
Those are the solutions that we come up with, as we said as well. Do I look at the local markets? Do I look at value engineering, where I do change something that I'm getting from the Far East to something that is available ready and I can get from Europe? Maybe. Do I find something that can be produced locally here, still in the UAE? Maybe. We'd love to. We're working hard towards that solution that is, as I said, much more sustainable, much more of an ecosystem for us down the road. So this is what's driving it. This is where we would like to go into. But it means, at the end of the day, it means you're drifting from that initial plan that you have put on those projects. And that's the disruption we're going through today. It might be an eye-opener on those future projects. Yes, it might be better planning for the future projects. I wouldn't say better planning. I would like to take that back. I would say a new way of planning for those new projects because of that lesson learned number 10 in that region. Yes, maybe.
Lesson number 488.
488.9 going into let's see.
Look, there's pressure on all of the contracts at the moment. All of the delivery timelines will have to, I guess, many will have to stretch, or you have to adapt. The UAE, Dubai, the region, to be fair, has long been seen as one of the ultimate safe havens for investment. There's no reason to assume that won't continue, despite what you read, and we are reading at the moment. Do you think the construction industry can keep its momentum up in this kind of holding pattern environment? I use that phrase under advisement, of course. That's what we're experiencing in the regional economy. If this situation lasts.
See, this situation, the minute this situation ends, we need to be ready for the repercussions. We need to be ready for what's after it, which might be in so many forms, the aftermath on the economy, the aftermath on human capital, and so on. So we need to understand that this is something that's gonna be around for some time, and we need to be ready to navigate through these challenges.
And you need the solutions providers to do that, don't you?
Exactly, but we've done that before, haven't we?
Sure. Yeah.
So, and as I keep on saying, it's the 2020 year was not far away. It was 4 or 5 years down the road. So we've done that. So we know how to navigate through those challenges. But am I worried about this region? Well, no. We know very well the governments in these regions, they know how to drive the economy. They are investing largely in the economy. They know how to navigate through these challenges, the resilience they have, the amount of drive they have to invest in their own businesses, in their own economies, in their own developments is massive. We've seen this. We've seen that commitment, and there's no reason why there's no why this won't rebound and come even stronger. It's just where it's a drop and then you'll come back stronger out of it. We have no reason to believe we're not gonna end up coming out of this stronger. Now the big question is, as I said at the beginning, how long this will take and when you'll start rebounding and rebounding out of it. But no reason not to come out of this stronger.
Final question for you. We've got a couple of minutes left, and I realise I've kept you far longer than I meant to, so I appreciate that, Gilbert. What's the key priority, do you think, for developers if you're starting a new project at the moment?
At the moment, I doubt we're going to start a new project. But the minute we do...
But for those who have... they were on track, and
all of a sudden that optimism has gone. No, but no, definitely. As I said, back to that planning phase.
Right.
So today, the way we're going to plan projects, define projects and plan them, is definitely changing. Be it adding more buffers to our working schedules, to our budgets, maybe. I would say definitely, but I would say I'll keep it at maybe as things keep on evolving.
Right.
Let's see what tomorrow holds. But definitely the planning stage is a stage that will be approached differently. Selection of contractors who have the ability to adapt to challenges will be a key factor. And definitely the way we sign contracts and what clauses do we add to them, be it force majeure and stuff like that, will definitely be a part of how do we appoint and manage and contract management. So those elements I definitely see are going to play a factor on our future projects.
I've enjoyed talking to you this morning, I have to say. Gilbert Bustani is the Vice President, 3D Consultants, part of the Shalhu Group. We're talking project delivery in the Middle East. And thank you once again for braving the rains and making it here today.
Thank you. Have a good day.
Good to have you here. Gilbert Bustani at Mira Business FM.
Mira Business FM, Dubai's home of business radio.
Good afternoon. It's 12 p.m. I'm Sahar Mushtaq, and this is the news on Mira Business FM. These are the headlines. UAE Airlines are continuing to expand their global network. Local media reports show that carriers now operate flights to more than 250 destinations worldwide. Airlines include Emirates, Etihad, Fly Dubai, and Air Arabia, which are adding new routes. They're also increasing flight frequencies. These expansions cover Europe, Asia, and North America. The growth reflects strong travel demand. It also highlights the UAE's role as a global aviation hub. This comes despite the ongoing airspace disruptions, and regional tensions are still affecting the air travel. Fuel prices are rising worldwide. Reports show dozens of countries have increased retail fuel prices this month. The hikes vary depending on local taxes and the supply pressures. Meanwhile, the UAE is expected to announce April's petrol and diesel rates tomorrow, according to local reports. Experts link the increases to higher crude prices and global uncertainty. Reuters reports that Australia is taking steps to ease rising fuel costs. Australian Prime Minister Anthony Albanese has announced a temporary halving of the excise tax on petrol and diesel for 3 months. The measure is expected to reduce prices by around 26 cents per litre. Officials say that government is also supporting spot fuel cargoes to maintain supply stability. The average retail price of a litre of diesel rose to more than $3 in Australia last week, and petrol to over $2 according to the 29th of March report from the Australian Petroleum Institute. China has increased the limit of how much its investors can put into foreign markets. This is the biggest boost since 2021, and it will let Chinese institutions buy more foreign stocks and funds. Experts say that this move is aimed at helping China's investors diversify globally and connect more with world markets. A report on Yahoo Finance says this quota expansion signals Beijing's push to integrate more with global financial markets. That's the news for now. Follow more news on our website, mirabusiness.fm.
Mira Business FM, where business comes to talk.
Good afternoon and welcome to Midday Majlis with myself, Sahar Mushtaq, on Mira Business FM, where conversations connect and ideas come alive right at midday. Before we dive in, remember that you can catch us live on YouTube, Rumble, Facebook, and of course, Telegram, and our podcast is available on all your favorite platforms. Now, in times like these, when there is uncertainty in the market, and shifting consumer confidence, now businesses are being forced to rethink how they show up because it's not just about selling anymore, it's about connecting, building trust, and staying relevant in a way that feels right for the moment. So today on the show, we're talking about how SMEs and founders can maintain visibility, adapt their messaging, and navigate changing consumer behavior, all without needing massive budgets. And to guide us through this, I'm joined by Candice Braganza, who is the founder of Sculpt25 Creative and a brand expert who helps businesses build meaningful and effective communication strategies. Candice, it's really great to have you with us today on Midday Majlis.
Thank you for having me. Pleasure's all mine.
And we would like to start with the foundation of all of this. So, what key changes are you at the moment seeing in consumer behavior here in the UAE?
Well, I'm going to start by saying that the UAE has a track record that most markets can't match when it comes to recovery. So, consumers right now have the ability to spend. It's just that they're a lot more cautious when they're doing it. And I think that is creating a lot of changes that we're seeing right now. In terms of shifts in consumer behavior, I'm actually going to start with something that's very interesting. So we all know the three-tier pricing, right? So you've got three products. One is priced at the lowest point, and one that's average priced, and one that's quite high priced. So I'm going to ask you, which one would you generally go for?
The lowest, I guess.
Okay. So most people would choose, research shows that most people would stay in the middle because it seems like the safest choice.
Mm-hmm.
What happens in times like this is it completely flips. So you have people that will now go towards the lowest or towards the highest.
Yeah, I was saying that at this point, I would choose the lowest.
Right. Okay. Yeah, this is exactly what we're seeing. And the reason for that is the lowest choice seems a lot more safer.
At the moment.
And for those, let's say, who do have spending power or those who do want to indulge, because psychologically as well, a lot of people fall into this is stressful, I need a break, I need to do something for myself. So you do have people that stay at that top. So what happens is the middle market gets completely squeezed in. And we see this with restaurants happening. Your local shawarma place or your local cafe or your community cafe is doing well. The top-end restaurants as well, they're doing well. But the ones in the middle are the ones that are they've got empty tables right now. And this has been consistently seen across different industries as well.
Right. So then there is a big shift in the consumer's behavior, right? And moving on, beyond what people are buying, what emotional factors are influencing how consumers make decisions right now?
So what happens is in times like this, when your brain senses threat, what it does is it freezes and it holds. So you go into precautionary savings mode. So a lot of people now, they don't really know what's coming next. They don't really know how long this is going to go for. So what your brain does is it automatically says, I'm going to save, or I'm not going to spend as much. So psychologically, that's what we're seeing. And one of the things that I've seen a lot of brands do, which I wouldn't recommend, is they create additional pressure by adding limited time offers, flash sales, or discount valid until X amount of days.
Which can be very overwhelming at times.
Exactly. So your consumer now is already very heightened. You have stresses, you have emotional stresses, you have financial stresses, and your consumer is already quite stressed out. And on top of that, you're adding pressure. Now, it works sometimes, yes. You might fill in your bookings, you might sell out your products. But take that versus a brand that says, we recognize what's happening in the market. We would like to extend, discount for an entire month. Come when you feel like, this is what we're doing. Now, when it comes to positioning, when it comes to loyalty, when it comes to trust, the second brand has completely leveled up, right? So that's the one shift that we're seeing, or rather the second shift that we're seeing.
Right.
And the last thing that I've noticed, which is quite interesting, but this is something that happened during COVID as well, is in times like this, your cognitive load is so heightened that people tend to turn towards brands and people that they already know and recognize and trust. So what we're seeing is brands that have consistently put in effort and investment into marketing, and those founders or professionals even who have personal brands are not just keeping momentum, but they're also gaining more opportunity. Because a lot more people now are turning to those who trust, because the cost of, let's say, even as a business to acquire a new customer, or from a customer side to go to someone that you don't really know before, you've not heard before, is a lot more higher. The decision, or rather the cost of making the wrong decision, just feels a lot more higher right now. So you turn towards people and brands that you already trust.
Right. So when you are actually turning to brands that you already trust, in this process, are the new startups or new brands struggling?
So yes, that's one. New brands that are coming up are struggling, but it also depends on their positioning. And I'll give you an example of the giving movement. They started during COVID, peak during COVID, when we could not even go out and we needed to apply for a permit. But the way they did it was very smart, and that's actually what worked for them. They didn't position themselves as a fashion brand. They positioned themselves as a movement. They gave back to communities. So back then, if I'm not mistaken, they had this movement that they were doing, that every purchase had about 15 dirhams that would be given back to charity. And with that, what happened is a lot of people, it gave them a purpose to buy from this brand. They could do it. They could do something good sitting at home.
Right.
Right. So for new brands, I would say brand positioning and the way you enter the market right now plays a big role. And then the second is, and this goes for new brands and those brands who probably did not invest in consistent marketing or haven't been positioned properly. Same for personal brands. The best thing they can do right now is collaborate. If you don't have the trust, or if you haven't built that, the best thing you can do is borrow trust from someone who has, if of course you're aligned.
Who has built it already.
Exactly. So this is what we're suggesting to both brands and people.
Interesting. And are you noticing this across the board? Are there, certain industries or categories that are holding stronger or slowing down more than the others?
I could answer that from two ways. So where I'm sitting, running a creative agency, I know what's happening in the creative industry, right? So big productions have, of course, taken a bit of a pause right now. But it's not to say that marketing budgets have decreased. They've just been reallocated towards strategy and positioning. In terms of the other industries that I can see through my clients, and I have a sense of the wider market, I would say, yes, certain industries are definitely doing better, or rather they're maintaining momentum, and this is your healthcare, financial. I've got clients that are financial coaches. I've got those who are in mental health space, and they're doing quite well because at the moment they've also positioned themselves quite well. The minute all of this started happening, they were visible. They were providing value. They weren't selling their courses or their services, but they actually came forward to help people. They started doing workshops, free Zoom mental health workshops, or free financial advising.
And that's how their visibility increases
Exactly.
around this time.
Yeah.
Okay, that's very wise to do, I guess.
Exactly.
And what actually builds trust for a brand today, especially around this time that we're in, from a consumer's perspective?
So this is what I've been telling all of my clients, right? The question isn't how do we sell more right now? The question should be how do we make it safer, easier, and worthwhile for the consumer to choose us right now? And all of that goes, for me, I always say when it comes to marketing and when it comes to building trust, it has to marry your operations. Marketing and operations go together. And the one thing that I've been advising all of my clients to do is first and foremost, simplify everything. Go back to operations, simplify your offerings. If you've got a course, let's say that's 3 months long and it's high ticket, you need to break that down right now, because a lot people right now aren't looking for big investments and long term. You need to be able to match the market and match what's going on. So that's the first thing we're doing. We're simplifying booking processes. From the time someone lands onto your Instagram or your website, how many steps does it take for them to actually book in? Right? So usually in general those number of steps always need to be shorter, but right now we're looking to really close in on that to make it easier for the customer. And the same goes to providing value. I've been telling all of my clients, stop with the hard. We're not pushing sales right now. We're actually adding value. We're showing the customer why it is worthwhile to choose us. What is it that this product or this service actually does for you? Which in general we do anyways, but right now we've just pivoted the strategy a lot more towards that.
Right. And so when we said that consumers are looking for the discounts, they're looking for the cheaper deals right now. So does that also make their mind shift, work in a way that they want the best of the best quality for the little money they're going to pay?
In a way, yes, but from a brand positioning perspective, I've always advised against that. I would say from a brand's perspective, if you want to do something like that, add more value rather than lower your price. For example, add in bundle offers or give a little bit more than you did for the same price. Because in a way, you're kind of showing your customers that, okay, you didn't trust the price to begin with. And then there's a whole other circle that comes into play in terms of where your brand is sitting at when you do that. Because yes, people are expecting that, of course. And from a strategy perspective, a lot of brands are discounting. You can see discounts flying all over UAE, and that is
so many deals out there.
So many deals, and that is okay. But I always feel like that it's best tied to something of value rather than just a price drop.
Right. And now the question is that should brands continue marketing the way they were doing, or they should actually come up with a different strategy around this time?
100% come up with a different strategy. What worked a month ago is not going to work now. We've already seen it happen this month. It does not work right now, and it's not going to work in the next couple of months as well. The minute something like this happens in a market, your consumer behavior completely shifts. You need to tailor your marketing strategy and your communication and your operations and your offers as well to that if you do want to keep momentum and if you actually want to bring in revenue as well.
Right.
Yeah.
So what worked a while ago may not work now or sometime in future, right?
Yeah.
As the whole behavior has changed, the whole approach has changed. And if they do stay visible, the brands, I mean, how should the tone of communication change during these sensitive or uncertain periods?
So the one thing that I have seen that I wouldn't recommend is a lot of, or I wouldn't say a lot, but there are a couple of businesses that I've seen, they've used normal, what do you call it, as scroll stopping techniques, which is use news templates for your posts, or let's say using more of like bait click marketing, where you're using the entire situation of what's happening to get access. And in a way that does feel as negative marketing or manipulative marketing, I would say stay very clear from that. For us, what we're doing is we're reviewing every piece of content that we're putting out in terms of how does that sound? What are we saying? What do we need to revise? We're more so bringing in value to people. We're pushing off hard sales, like anything that says buy now, or, this is what we're selling. We're the same product, for example, rather than taking the post and saying, okay, we're doing a discount, you need to buy this now. We're basically providing value around it, helping people understand what does that product do, what does the service do, and we're focusing on that.
Right. So the tone really matters at the moment.
Absolutely.
And the way you communicate as well. And what are some marketing or the messaging mistakes businesses should be very careful about and they should be avoiding right now? Because we do get all these messages and emails about lots and lots of offers, right? And sometimes they're not for the right kind of people they're coming to. So, what's going on with that?
I would say in times like this, it would be best to, I wouldn't say stick to, but it would be best to approach people that are already in your client base, your clients that have previously worked with you, or clients that have shown interest. It does feel odd to reach out to new clients to push for your services and your sales, but at the same time, there's a way that you would probably do it. If you feel like your services or your product genuinely adds value to someone, I would say go ahead and do it. But your general email marketing blast that used to work last month, I would say sometimes can turn off potential clients as well. Within that as well, it's the way that you communicate something. Again, adding more pressure in terms of time or in terms of heavy discounts, I would say completely throws your brand positioning off. What we've done is instead of doing mass emails and a very generic email, we've actually taken time to see who our potential clients could be, who we could actually add value to, and we've created custom emails to them, explaining how it is that we can help, especially in times like this. Because even for me as a business, right, for creative, like we do creative, we do shoots, we do a lot of different things, fashion shoots, your big monthly production shoots have paused down. So what we're doing now is we are helping businesses navigate this period through revising their marketing strategy, revising the way they show up. And it comes down to, again, how do we approach our ideal client? And this is exactly what we're doing. We're not just blasting out emails to just everyone, but we're really understanding the person, understanding their business, assessing how it is that if we can even help them at the stage that they're at, and then basically reaching out to them.
Right. So having a purpose is really important at this time.
Yeah.
Right. And do you see brands just kind of like doing everything and anything to just kind of be visible at this point? Because I know people are really like, brands must be really, after making their sales.
Yes, we have. We have. We've seen a lot of people do things that they probably could have avoided. And that's the whole thing, right? You want to be visible. But confusing that with actual, I would say, growth is what's happening right now. So initially you had people posting updates of what was happening, which wasn't really required unless you're in the field where, you do have, I would say, a certain insight. We've seen a lot of people do things that I wouldn't really advise. But at the end of the day, I would say people are learning. People are learning maybe from seeing other brands, but there is usually a framework in place for things like this. And it comes down to, again, going back to your branding, going back to your brand values, keeping the tone as you would, but showing a lot more compassion and adding a lot more value in your communication.
Right. And for SMEs, especially, what are some practical low budget strategies that can still make a strong impact right now?
Okay. So I'm going to circle back to simplifying all of your processes, right? So simplifying your offers, simplifying your booking process, simplifying your payment process.
The operations.
Exactly, the operations. The second one is something that is very underrated and overlooked, and it's a tool that we all have, is picking up the phone and calling up your customers, your active customers and let's say previous customers that you've worked with, not to sell them anything, but just to check in on them. That has shown to really help in terms of also rebookings.
Checking on them.
Yeah, checking on them. I've had a lot of businesses do that with me
without
as well.
offering anything.
Just without offering anything. Just a couple of seconds, just call them up, check in on how they're doing, check in on how their business is doing. It makes a lot of difference. And it's so much better than sending out an email with a new offer.
Without a purpose.
Exactly.
Yeah.
For active clients, what that also does is it then lets you pick up on if there's any shifts going on in their business, if you need to adjust the scope, and more so if they are reconsidering, because that's the time that you can address all of those concerns before it becomes a decision. So for SMEs, I think that's very important to get that done. And I would say the last one would be, like I said before, collaborations. If as an SME, you're sitting at a point where either you're new or you haven't really built good traction in the market, you haven't positioned yourself well, people don't know you, the best thing you can do right now is borrow trust from someone else.
But borrowing trust from someone else and collaborating may cost a lot as well. So how is it that they can find the right kind of collaboration that's not going to cost them so much?
Well, the thing is, right now, if you look around social media and if you look around businesses, almost a lot of us are collaborating. There are a lot of collaborations open from a creative industry perspective. A lot of studios are offering free shoots for new brands. A lot of other businesses are collaborating in terms of maybe it doesn't always have to be bringing in revenue, but it's also building a lot of connections or a lot of opportunities.
So there are
and a
so
lot of
many barter
networking.
deals out there.
100%. Yeah, a lot of
Okay.
restaurants as well that would initially have a minimum spend for workshops are now waiving that off. So in terms of, I would say, collaborating, the cost has actually dropped quite a lot because people are supporting each other. And that's the beauty, I would say, of the Dubai community. Everyone pulls in, everyone's coming together. The number of collaboration opportunities I've seen is over the chart. So
Right. And I remember that, the GCC quickly bounced back to being great right after the COVID-19 happened. And I think there's always an opportunity to go back to normal and businesses to be the best again and, perform at their great levels once things get better.
100%. Some of the best businesses that are doing or that are performing well right now were born during COVID. And the reason also is when you look at it, right, a lot of people go silent. They probably don't communicate well. In a way, your competition has decreased. In a way, you do have a platform. If you're doing everything right and if you know what you're doing and if you've got a good strategy, you can really come out of this stronger.
Right.
Yeah.
And I think once we're in that zone, we only come out more stronger and productive.
100%.
Right. So now, finally, looking slightly ahead, how can businesses see this period to actually strengthen their brand for the long term?
I would say stay visible. Do not freeze, do not completely shut out. Stay visible, communicate with your clients, maintain those relationships, look out for opportunities where you can grow, if not revenue, but grow your connections, grow your business. There is a lot that is happening right now, but there's also a lot of beautiful things happening in the community, the way people are supporting each other, the way businesses are collaborating. I don't think in the past year or the past 2 years, I've seen as much opportunity in terms of business growth, revenue aside, but business growth right now. It is huge, the amount of people that are showing up to help each other.
Right.
And I think the businesses that actually look at this as an opportunity, right? And I'm not just talking businesses, I'm talking founders and professionals as well. A lot of us are now taking the time to refine our skills, to learn more, to structure our offerings a lot better. So there's a lot of work that's happening. So in a way, if you look at this as an opportunity to grow, you're already far ahead.
Definitely. And you just said that don't cut off. Now, when have you seen brands really cut off?
I would say when it is more like a founder-led brand or a small brand that they don't really have support. And when I say support is they don't really have a team. When all of this started happening, of course, it's a lot more, it's a lot stressful. And the one thing that we underestimate always is the stress that a founder has to go through or someone that's starting a small business has to go through, especially if they're doing it all by themselves. You have your own emotions to manage, you've got the emotions of your family to manage, plus you've got a business to run, your clients. What we did see in the first 2 weeks is a lot of people, especially if they're running their business all by themselves or they have a personal brand, because it was so overwhelming, they completely tuned out. Which again, if that's something you need to do, that's perfect. But I would also say in times like that, that's when you get in help. So when I say shut off, that's what I mean. And even right now, a lot of people are a little hesitant to jump back online and say something because they feel like they've lost momentum. They feel like they don't really know what to say. They don't really know how to re-enter the space. So there's a lot of that going on as well.
So then I guess it's learning from each other, being productive and being communicative as well.
Exactly.
Right? What is the final key piece of advice that you would like to leave with our listeners today?
I think that would be to keep pushing forward in times like this. Like I said, it's the one time that we also see a lot of opportunities happening. If you feel overwhelmed and if you feel like your strategy isn't working or you don't have 100% faith in, let's say, this is what you've done and this is, how you want to go ahead. I would say get in help, get in someone who knows how to navigate the market, someone to support you. One of the things that we've done, and we did this in week 2, is we released a marketing pivot playbook that's completely free to download from the website. And that basically lets you understand consumer behavior, the shifts that are happening right now. There's lots of bits of information there that helps people and businesses navigate through this period. And on the same time, we're also releasing, or rather it's already in progress, a 14-day series where every day we provide a value-based post.
That's very interesting.
And this could be insights, it could be actionable advice for people to navigate this period better. So that's what we're doing. So I would say if you're struggling or if you're not sure of how to move forward, get someone on board that actually can help you with that.
Right.
Yeah.
Thank you so much, Candice, for being able to share your thoughts with us today. It was really lovely to have you on the show.
Pleasure is all mine. Thank you.
That was Candice Braganza, founder of Sculpt 25 Creative, sharing insights on how businesses can navigate uncertainty while staying visible and relevant. And the final takeaway is that it isn't the time to disappear. It's the time to be thoughtful and to truly connect with your clients. If you are a business owner, keep showing up and just do it with awareness and purpose. This is all from our discussion today. And to everyone listening, don't forget that you have to give us a like and you have to subscribe to Mira Business FM. Stay safe wherever you are. Take care of yourselves and look out for another one. This is me, Sahar Mushtaq, signing off. This is Mira Business FM.
Mira Business FM, Dubai's home of business radio.